Yes, people, a very, very happy one to all of you. So, guys, we're doing this chapter called as accounting process, which is chapter 2 of the ICAI module. We have started with chapter 2 only. In the last class, we had a discussion on the rules of debit credit, and under that, we have two rules, which is golden rule and modern rule. So, last class, we had a discussion on golden rule, and last class, we had a discussion on modern rule. So, can we do a quick recap of modern rule? Okay. Modern rule is also called as American approach, also called as accounting equation. As per this rule, in a transaction, any accounts you will be able to classify either in form of asset or liability or capital or revenue or expenses. Ultimately, in business, all the accounts will come and fall under any of these heads only. There are no other heads apart from this. So you take any account, will be comfortably be able to classify under asset, liability, capital, revenue, and gain. Now, revenue and expenses, sorry. Now, asset by default has got what type of balance? Nature of balance is debit balance. By default, it is debit. All of us has agreed. If you want, we can change it to credit. So if you want to change this to credit, then every person in the entire country should make this credit balance. But we cannot do that. So we have agreed that formatly, we have to follow asset as a debit balance item. And if asset is debit balance, liability and capital is always opposite of that, which should be credit balance. Revenue, credit balance, expenses, debit balance. Both of these are coming from where? Golden rule. Debit all expense and losses. Credit all income and gain. So by that virtue, it becomes credit balance and debit balance. Now, what is the meaning of debit balance, credit balance? You'll understand even better when I do ledger with all of you. That is the place where true meaning of the debit balance and credit balance can be understood. Now, once you classify an account as asset, you have to ask yourself a question. Because of that transaction, that asset value is going to increase or decrease. For example, Ram contributed 1,000 rupees as cash in form of capital, or 1,000 is contributed as capital in form of cash. So here, which two accounts affected? Cash and capital. So if I talk about cash is what classification? Asset. In this transaction, what is the impact of this transaction in the cash balance? Will it increase the cash balance or decrease the cash balance? It will increase the cash balance. So cash is asset. Asset is debit balance. To increase asset, debit. Increase means what? Add debit. To decrease, opposite of that. Less credit. Capital. In this transaction, capital. What balance? Credit balance. If I give more and more capital, the capital of the business will increase. To increase capital, credit. To decrease capital, debit. So everything is from what point of view? The point of view is increase and decrease. In that account, the balance of that is increasing or decreasing. That is the point of view. It is a matter of few classes. Once you get used to this kind of language, increase, decrease, automatically you will feel more comfortable in the modern rule compared to golden rule. Next, revenue is what balance? Credit balance. To increase revenue, credit. To decrease revenue, debit. Expense is what balance? Debit balance. To increase expense, debit. To decrease expense, credit. So today I'm planning to do two questions, which is purely based on modern rule. So every time I do a transaction, I'll keep on asking you the question. That is how you have to ask yourself a question when you are solving the question in the exam. With that, you will be able to do the questions under modern rule very comfortable. Now, the next topic that I'm going to discuss is journal. Once I discuss journal, then we'll go to the two questions that I planned from ICAI module today. Now, all of you know that accounting is a systematic process of what? Identifying a business, financial transaction, and event. On what basis will you identify it? On the basis of source document or evidence. On that basis, you'll identify whether this is a BFT or BFE. Once you identify this is a BFT or BFE, you have to measure in terms of money. Obviously, it will be having a monetary value, but the monetary value should be of a common unit of measurement. So that you have to convert. If it is in dollars, pound, yen, everything should be converted to INR. Once that is done, you have to now do the recording. Now, recording is done through two things, either through journal or subsidiary books. Now, I'm discussing about which point now? Journal. Now, in journal, what are the steps of accounting? So the first step is identify in the BFT. What are BFT you identified? No. In that BFT, what are the accounts involved? That we learned? Yes. Then that account is of what nature? How will you classify? So classification can be done either as per golden rule or as per modern rule. Once you classify it, now you can say, okay, this account will be debited, this will be credited. So in our example, I took no Ram contributed 1,000 rupees as capital in form of cash. So how many accounts identified? 2 accounts, cash and capital. So you decided that sir, cash is increasing, debit, capital is increasing, credit. So you have applied the rules of debit credit. So till this we have completed. What is the next step? Sir, by following the double entry system of accounting, we have to start a recording of it. So now we are going to learn that how the recording needs to be taken care of. While doing the recording, what you have to ensure is that you are following double entry system of accounting. Means what? Every transaction should be given twofold impact. One is debit impact, second is credit impact. And both are opposite to each other. So how do we give this impact? In what format? So experts suggested that we will, give the entry in form of journal. We'll give the entry in form of journal. So what is the meaning of journal? Journ in French means day. So it's a day book. Means what? It's a book where the day-to-day transactions are recorded. In other words, it is a book where the transaction that takes place on day-to-day basis, it is recorded. That is called as journal. From the French word, it has been derived. So journ in French means day. Journal means recording the financial transaction. What are we recording? Financial transaction on day-to-day basis. That is on daily basis. As soon as the transaction takes place. In what order? In the chronological order. So in today, let's say today is what? 21 April. 10 transactions taking place means you have two options. Either these 10 transactions you can record in the same order as and when they have taken place. Or you can jumble and also write it nothing wrong. But the only rule is that today's transaction should be recorded today only. I cannot record tomorrow. So within the day, if there are 10 transactions, either you record in the same order as and when it is happening. Or we can jumble and also write it. No problem. But the day's transaction should be recorded that day only. You cannot write in the next day. That is not allowed. And once you record the journal entry in a particular format, what we are going to learn now, you have to give a short description to it so that any person reading the journal will understand what is the purpose behind that journal. What is the meaning of that entry? Person will identify through narration. So narration is nothing but description of that entry. We don't call this as description. Technically, we call this as narration. Journal is called as book of original entry. All of us we know this. And this is also called as book of primary entry. Primary entry means what? This is the first time where the entry has been recorded. So this is the primary place, the first place where the entry is recorded for the very first time. So book of original entry or book of primary entry. Any problems? Easy? Okay. Format of journal. First, always you record the heading in the books of so-and-so person, in the books of KVA Limited, in the books of KVA Enterprise. You should write the heading first. Below that, format begins with date column. Next, particulars column. Then LF column, debit column. Debit, you have to mention rupees. Credit, rupees. You cannot deviate from the format. Sir, why is date column important? Arey Baba, whenever the transaction is taking place, on that day if I record, I'll be able to understand, okay, this transaction is taking place on that date. And future also, if I want to go back and trace, with the date, it becomes easy to trace. If a person said that, sir, I made you the payment, the next question what will ask, when did you make the payment? Correct? Even when you make the fee payment, I'll ask you, when do you make the fee payment? So date is important, no? So that we can track it easily. So all the transactions should have the dates. Any doubt in it? So that is the importance of the date column. Tracing becomes easy. Okay. Second, in the particulars column, you have to mention the information of those accounts which you have identified in the transaction. In the transaction, how many accounts can take place? 2. Wrong. Aspect is 2. Account can't be 2 or more. Minimum 2. One in debit, one in credit. But it can be more also. So how many accounts you're identifying, those accounts information you have to capture in the particulars column. Also, not just that, capturing alone is not sufficient. You have to mention that which of these accounts are debited and which of these accounts are credited. So this is giving 2 information. Particulars column is giving 2 information. One, it is giving information about the account involved in this transaction, which are all the different accounts involved in the transaction. And second, which account are you trying to debit and which account you're trying to credit. That also we are getting a clarity from the particulars column. Any problem? No problem. Then come LF column. What does LF stands for? Ledger folio. In today's context, this LF column is useless column. Back then in olden days, when we are doing the manual recording, so what happens? We had multiple books for journal. Because you have to record so many transactions on day-to-day basis, no? So there will be at least 10, 20, 30, 50 books. Now from all this transaction, from this journal book, you have to post to a place called as ledger. Again, ledger is multiple ledger. For cash and bank itself, multiple book. For cash alone, they'll have 10 books because so many cash transactions. Bank will have at least 20 books. So many bank transactions. Sale, purchase book, so many kind of ledger is there. Now, this particular journal is gone to which particular ledger? How will we know? If I want to know whether this journal is recorded in the ledger or not, which ledger, boss? Which ledger? Because cash ledger has got how many books? 5 books. So out of these 5 books, in which book it has gone inside? Is it gone in book 1, 2, 3, 4, 5? It becomes difficult for me to trace. So back in those days, I used to write it 5 year. Means what? This transaction which is taking place on 25 June 2019 has gone to cash book number 5. So it becomes easy for tracing. So one LF column will tell you which book. And with the help of the date, you can understand approximately in which page the transaction is recorded in the ledger. So to trace this transaction in the ledger, it becomes easy. In the ledger, we have one more column called as journal folio. Means this in the ledger, you are writing the journal folio number. That this is coming from which journal book. So you are giving the cross-referencing. In other words, when we do the practical question, we do working note. No? So in the main answer, we give reference to working note. Like that, this is the reference giving number. In today's scenario, it is of no use because today when you pass all the entries in the software itself will record the transactions in ledger. It is easy for us to go and trace. It is not that complicated as it is used to be earlier. But since we are doing now manual accounting, correct? We are not doing software accounting. Now, what are we doing? Manual accounting. In that case, if LF column is opened, then how it is opened, what is the purpose is what we're trying to learn. Otherwise, when you go to practical life, auditor's office to work it, you will never create an LF column. Instead, they'll have something called as voucher column because every transaction should be supported by voucher number, no? So document number, voucher number. So that column will be there for reference, but LF column you'll never find it. It is outdated, but it is there in the format because we're doing the accounting in the manual form now. So as per the old format, we are still following the same thing. Otherwise, in today's scenario, LF is of no use to us. And next comes your debit column. So whichever account is debited, record in the debit column. Whichever account is credited, record in the credit column. Other places, leave it blank. Other places, leave it blank. So you have done so many entries already in 11th and 12th. So I'm sure you're aware about this. Next is below that, you have to compulsory write narration. Now, narration is done in 2 ways. For example, Ram introduced capital means Ram introduced capital. That's all. This is one way of writing it. But this is not a professional way of writing it. Professional way is what? Being 1,000 rupees, Ram introducing as capital. So the word being has to be there as a prefix to all the narration you write it. That is the right thing. In matriculation, what did you follow? Being only. So in matriculation, what they're following is still correct. In CBSE, they have spoiled the students. They didn't use the word being. Directly, they write what they feel like doing, but does not give a professional look. So in CA Foundation, they expect the narration should begin with being. Being goods sold on credit. Being goods sold on cash. Like that, it starts with being. Am I loud and clear? Any difficulty in understanding the format of the journal?
No, sir.
Everybody, open your mouth and respond. No. Wonderful. Now,
No, sir.
What are the different types of journal entries? Can somebody tell me? What are the different types of journal entries? Let me start with Nancy. What do you think are the different types of journal entries? Whatever you know. What are different types of journal entry? Types of journal entry. Loudly. Or hint kudukran. Simple journal entry or single journal entry. Like that. Can you think of something else? Contra entry can I take as a type of journal entry? Contra entry is a type of simple entry. It's a classification of simple entry. Contra entry, we cannot take it as a type of journal entry. Contra entry is a part of single entry where where cash withdrawn from bank. That time contra comes. But the cash withdrawn from bank, what is entry? Cash to bank. So that is what type of journal entry? Simple journal entry or single journal entry? What is it? I'll explain. That is simple and single. Apart from that, what are the different types of journal entries? Any idea? Chuma guess. I gave one hint. Simple journal entry. Something related to that. Compound journal entry. Compound journal entry. Simple, compound. Okay. Anything else? Rectification journal entry. Very good. Third, rectification. Next. Adjusting entries. Very good. Transfer entry. Very good. Closing entry. Very important. I was waiting. Who will tell closing entry? That is the important thing. Okay. Then opening journal entry. So different types of journal entry is nothing but single entry. Single entry, rather we'll say simple entry. Not single, it is simple entry. Simple journal entry. Next is compound journal entry. Opening journal entry. Closing journal entry. rectification journal entry, adjusting journal entry. All this is there in where? In 11th book, both in matriculation and CBSE. The only thing is people did not effectively focus on this. The teachers back then did not effectively focus on this. They said like whatever is important for exam, that much we'll teach and leave it. But my feeling is we have to learn everything. You will not get a specific question like this. What are the types of journal entries? Please write an exam. I still never ask this question. But as a chart accountant, we should know what are all these. Simple journal entry means what? So this involves only one accounting debit. All of you understand what is account? Ram's capital account, cash account, bank account. Only one account will come in debit and only one account will come in credit. Cash to capital, bank to cash, cash to sales, debtor to sales. Like that, only one account will come in debit and only one account will come in credit. This is called as simple journal entry. Any problem in this? Easy? Okay. Next comes compound journal entry. As he said correctly, only he said complex, because it is little bit challenging than the simple journal entry. So compound entry is nothing but little bit complex. So what is saying? It involves more than one account in debit, or more than one account in credit, more than one account in debit and more than one account in credit. Can somebody tell me the meaning of and or here? What is the significance and purpose of and/or whenever it comes, wherever it comes, accounts, law, whatever you say? What is the significance of word and or coming together? क्या बोला वरुण? क्या बोला? multiplication addition no, I'm asking in the context of theory. Okay, we can say that way. For or that is for or you're telling. And means wonderful. Now just read this. No, more than one account in debit and more than one account in credit means what? Two account in debit, two account in credit. This is one combination. Second combination is more than one account in debit or more than one account in credit. So this combination means what? Two account in debit, one account in credit, or one account in debit, two account in credit. These both means or. This means and. And means what? In both the places, more than one account is there. In both the places, more than one. Both the places, more than one. More than one in debit and means plus more than one in credit. Any problem? Or means what? More than one in debit. In debit, there could be more than one, or in credit, there could be more than one. Any problem? This is called as compound journal entry. Any difficulty in understanding compound journal entry?
No, sir.
No problem. Okay. Now, opening, closing, rectifying entry, adjusting entry will not be discussing here. We'll be discussing in the future when the appropriate time comes. From here, okay. From here, I'm moving on to next concept, which is type of discount.
So can you give so far?
I discussed what is the meaning of journal. What is the meaning of journal? What is journal? Journal in French means day. Means what? We are recording all the day-to-day transactions in a chronological order. This is called as book of original entry. Means what? First and foremost entry is recorded where? In the journal. In future, whenever you want to rectify anything, again you have to come back and record in journal only. Anything else that you want to know, journal. Anything else that you want to know in journal. And you record the entries in the journal, it has to be recorded on the basis of evidences. Now always ensure that when you record the entry in the debit column and the credit column, at the end, the total of the both should be same. Will we do total in every journal entry? No. We will not do total in every journal entry. But you have to check whether the total of both is same. If the total of both debit and credit column is same, which means you have followed double entry system of accounting. Are you able to follow? From there, we discussed two types of journal entry so far. One is simple journal entry and second is compound journal entry. That's all. The remaining four are there. No, remaining four, five are there. Remaining five, I'll be discussing when the right time comes. Now, from here, I'm moving on to next concept called as types of discount. So my question goes to all of you. How many types of discounts are possible? 2. Okay. Anybody else? 3. Okay. 2 means which 2 kana? Trade discount and cash discount. Who said 3? Abhinav said 3. Yes. Trade discount, cash discount, rebate. 3 are there. So guys, there are 3 type of discount. One is trade discount, second is cash discount, third is rebate. Sir, why are we discussing this, sir? Are we having any practical questions based on this? 100% yes. This was covered in 11th state board. Trade discount is covered. Yes. Cash discount covered. Rebate. Rebate was not covered. Okay. We'll discuss today. Trade discount. Trade discount is referred to as the discount, that is, trade discount means discount offered by seller. Normal discount who gives, boss? Seller only gives, no? So you go to Brooksfield, where lifestyle showroom. Who will offer discount? You will offer discount to lifestyle. Oh, I'm coming, I'm giving you discount. What discount will you give to lifestyle showroom? He is going to give the discount because he's selling the product. So he will sell the product at discount. So who will offer the discount always? Seller will offer the discount. Offered by the seller. To whom? To the buyer. For what? For bulk purchase of the product. For the bulk purchase of the product. So trade discount is a discount that is associated with the what? What type of purchase? Bulk purchase. If I go to any shop and buy one product, he will charge me MRP. He will charge me MRP. This is the maximum retail price he will charge me. On the other hand, the very same product, if I buy in 1000 quantity, what will he say? Or what will you say? Anna, buying 1000 quantity na, give me discount. Yes or no? So one product if you buy, 10 rupee. 1000 product if you buy, he'll give you discount. How much? 8 rupee. How much discount you got? 2 rupee. So this 2 rupee discount you claimed. When? What is the reason behind giving 2 rupee discount? Because of bulk purchase. Had you not done the bulk purchase, you wouldn't have got the discount. So trade discount is a discount given by the seller to the buyer at the time of bulk purchase, bulk purchase, bulk purchase. Generally, who does the bulk purchase? You know the chain of business? How does it function? What is the first chain of business? Manufacturing. Very good. So manufacturer. There's somebody called as manufacturer. Correct? Manufacturer manufactures the goods. Then he will sell the goods to the wholesaler or the dealer. You can call him as, there are multiple names to it. I'm keeping very simple for now. Wholesaler or dealer. Now this wholesaler and dealer will buy in bulk from the manufacturer. Then this wholesaler and dealer will give the goods to the retailer. And retailer gives the goods to the end customer. Manufacturer would have set one normal price for wholesaler and dealer. Means wholesaler dealer by default they have to buy bulk only. But in that bulk, what price you're getting? No, from that if you further want a reduction of a price, then you have to buy bulk over bulk. That is, if you buy in bulk 9 rupees. If you want a further trade discount, you have to buy even more in bulk. So normally the price that the manufacturer is charging the wholesaler is less only after a trade discount. But this manufacturer will try to attract the wholesaler, telling that if you buy more goods, if you do more business, I'll give you further more discount. So again here between them, what is the deal for the discount? Bulk purchase. Similarly, this wholesaler also will induce the retailer, if you buy in bulk extra, I'll give you more discount. Similarly, retailer also will induce the end customer to buy in bulk. So which end customer normally buys in bulk? Corporate people. So let's suppose if I'm a corporate, if I want to give gift to my students, so I'll buy 100 gift. So that is again bulk. Those people who are wanting to give gifts in the wedding, again they'll buy in bulk. So even end customer also buy in bulk. People have a wrong notion that the bulk transaction happens between only the manufacturer, wholesaler, dealer and retailer. No. Even between the retailer and end customer, the bulk deal happens. Wherever the bulk deal happens, everywhere the trade discount will come into picture. Am I loud and clear? Now, the business that is happening between manufacturer and the wholesaler, this is called as what type of business model? B2B business model, because both are business people. So it is business to business transaction. The dealing that happens between the wholesaler, dealer and retailer is again B2B transaction. B2B transaction, business to business. And again, the transaction that happens between the retailer and end customer is again B2C, business to customer. And if the manufacturer directly sells to end customer, it is called as D2C, direct to customer. It is called as direct to customer, D2C. These are the terms today you have to be familiar. As a chart accountant, you have to be familiar with all these terms. So this is not there in your syllabus, B2B, B2C, D2C. Out of my love and affection, I'm teaching. Are you clear at this point? What I told you in the beginning. Whatever is there here and here, everything I'll pour it on. What will I do keeping with me? Everything I'll share. Now, any difficulty with trade discount concept? No problem. Now let's talk about the accounting for trade discount. Trade discount, will you account anywhere in the books of accounts? Yes or no?
No, sir.
No.
Only will deduct the price.
Okay. Trade discount will be recorded in the books of accounts or not? Trade discount account debit. Trade discount is what? Loss. Debit all expense and losses. Should be record or not record? Yes. No. 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 Anybody saying yes? Trade discount is never recorded in the books of accounts. You can record it. But by recording it, what benefit are you getting? For example, let's take an instance. Amit sold goods to Vikas for rupees 1 lakh, allowing him a trade discount of 20%. Allowing him a trade discount of 20%. The invoice will be prepared as follows. Now, Amit sells the goods to Vikas for 1 lakh. This 1 lakh is called as what, you know? This is called as list price. List price. When you go for buying the crackers, what they give? List. List price. List is also called as catalog price. List price, catalog price, also called as marked price. What is it called as? Marked price. Or this is also called as gross purchase price for the buyer, or we call this as gross selling price for the seller. These are the different names. You can get question based on this, so be very careful. So list price, catalog price, market price means what? If any person is coming and buying only one product, I'll charge him 1 lakh rupees. But now, Amit sold goods to Vikas. Vikas is buying in bulk. He's buying 1 lakh rupees, which is according to him bulk purchase. So he's offering 20% trade discount. 20% trade discount. So how do you do the calculation? From the list price or the gross price, I'll minus always the trade discount. This 20% discount will apply on what? You'll apply this discount on the list price. How do you apply? 1 lakh into 20 by 100. Have you ever thought how this formula has been derived? Have you ever thought how this formula has been derived? 20% means what? 20 by 100 means for every 100 rupee bulk purchase, I will give 20 rupees discount. For every 100 rupee bulk purchase, 20 rupees discount. So 20 rupees discount I'll get if I purchase for 100 rupees. Therefore, if I now purchase for 1 lakh rupees, how much is discount? Cross multiply. This is called as my language. Okay, for all these people who don't know what this is, I call this as vegetable vendor technique. 3 kilo takali, 90 rupees. 90 ruwa. Then for 2 kg, how much? 60. 3 kg tomato, 90 rupees. Then for 2 kg, how much? 60. We call this vegetable vendor technique. But in mathematics, what is this called as? Cross multiplication method. Also called as unitary method. Yes, these are the different names. I'll tell you, every single formula in accounts, financial management is concerned. I don't know about maths. Every single formula which is concerned in accounts and financial management is derived out of this vegetable vendor technique only. We ended up by hearting. But if you know this technique, you can create the formula on your own. No need to give stress to your brain. So if I cross multiply, what will I get? 1 lakh into 20 by 100. How much it is? 20,000 rupees is your discount. So what is the balance value? 80,000 rupees. Now you're telling that no, sir, we'll record the sale at gross price only. So you want me to record sale at gross value, 1 lakh in the trading account. Trade discount, where do you record? 20,000 rupees as expenses in the P&L account. Does this make any sense? When you sold the goods to the customer, you know the value of the worth of the goods that is being sold. The worth of the goods that you sold is how much? 80,000. When the product was sold, in the invoice, what is the value of the product? 80,000. Then what is the fun in recording the turnover at 1 lakh rupees? When I do that, what happens is I'm unnecessarily trying to inflate my turnover and show. That's why experts said that trade discount will never be recorded, because trade discount, you are losing that money happily at the time of sale itself. You did not have any attachment with the discount amount. You are happy to lose that money. So I'm not bothered about the trade discount. Record the discounted price. That is after the discount, whatever the value is there. No, 80,000. This is what you record. Because in your business, it is very normal to give trade discount. So why do you show the sale at gross value and then give trade discount? Trade discount means what? Discount means always it's a pain. Discount is a pain. Did you give this discount in pain? You gave it happily. I went for buying one chocolate. He said, Pratik sir, if you buy 100 chocolates, I'll give you more discount. So did he give the discount happily or emotionally? He gave very, very happily. He was in fact trying me to convince me to buy more and more chocolates so that he can sell it at the high quantity. High quantity he can sell. So the trade discount which is given happily, that happiness, should I show in form of trade discount? No. Discount means what? Expense or loss. Loss is always an emotional feeling. It's a very bad feeling. So this trade discount is not my bad feeling. I gave it very happily. And I induced him to buy more and more product. By that virtually, this discount happened. So I need not show this trade discount in the P&L because I don't have to show to people that I was sad while giving this discount. I happily gave this discount because only because of this trade discount, I was able to push more turnover, more sales. So trade discount we never capture in the books of accounts. Not required. If you capture it, unnecessarily turnover will be inflated. So this will give a wrong picture to the users of the financial statement. You're telling my business turnover is 100 crore. Whereas actual sale that you've done is how much? Only 80 crore. Because 20 crore is what? Trade discount. 20 crore is trade discount. So 20 crore rupees trade discount should I show in my P&L as my expense and losses? Is it my expense and loss? I happily gave the discount, boss. No need to show that separately. Which discount I should show separately in the P&L account? That discount which I gave out of pain, bad emotion. That discount should be reflected. That pain I need to show to user. Look, this person did not give me the money. So to induce the early payment, I had to give him a discount. So you want to express your emotion to the users of financial statement. That is when you capture the trade discount in your, that is when you capture the discount in your P&L account. So this trade discount is not a painful emotion. It is a very normal emotion. So you will not capture this anywhere in the books of accounts. So always, whenever you record the purchase and sale, you will always record it net of discount. Net of discount means what? After minusing discount. So here, what is my net of discount value? 80,000 is net of discount. Whenever I say net of discount means what? From the gross value minus the discount. This 80,000 what you get is called as net of discount. Net of means what? The value which is coming after minusing discount. Any problem? Online people, any problem in this?
No, sir.
No, sir.
Everybody.
No, sir.
No, sir.
Now, please tell me, Amit is a seller or buyer? Seller. Vikas is buyer or seller? Buyer. Both of them are recording this, let's say, as a credit sale and credit purchase. So what will be the journal entry for Amit? In this transaction, how many accounts are affected? Let's talk from Amit's business point of view. 2 accounts. One is Vikas account, because I need to remember to collect money from that fellow. So I need to have his name registered in my accounts so that I can remember to collect money from him. So Vikas name I want. Second, sale account, because I should record my income. So please tell me which account will I debit and which account will I credit. So let's talk about Vikas first. Vikas. As per modern classification, asset, liability, capital, revenue or expenses. Vikas. Why is he asset? Sir, what is the meaning of asset? Asset means anything that I own in the business is asset, or anything that I expect to receive in future is asset. If I record against Vikas' name 80,000 rupees, means I'm expecting this money to come to me in future. So anything that I expect to receive in future is asset. If I do more and more sale to Vikas, my asset balance will increase or decrease. The money that I'm supposed to receive in future will increase or decrease. It will keep on increasing. To increase asset, what I should do? Debit, because asset is debit balance. To increase asset, debit. So Vikas account debit. Any problem? 80,000. And sale is what? Revenue. Revenue is what? Gain. Credit balance. To increase revenue. Credit. Revenue is credit balance. To increase revenue, credit. Two sales. Two sales, 80,000. Now, this 80,000 is what is reflecting in your sales accounts. When I open the trading account, by sales, what will be reflecting? 80,000, which is the net of trade discount. Always the sale should be net of trade discount. Any problem in this? Now, let's talk from the point of view of Vikas. Vikas is buyer of the goods. For him, which two accounts are important? Purchase account and Amit account. Vikas is buying this goods, so for him it is expenditure. Debit all expense and losses. Purchase is what balance? Debit balance. If I keep on doing more purchase, my expense will more increase. To increase expense, to increase purchase, what I should do? Debit. So purchase account debit. 2. Amit. What is nature of Amit here? Liability, because I need to remember to pay this money to this person. So anything that I'm going to pay in future is liability. I did not pay money to Amit yet. I'll be paying in future. Anything that I pay in future is liability. To create liability, credit. Because liability is credit balance. To increase liability, credit. To decrease liability, debit. So 80,000 and 80,000. Any problem? Are you all clear with the concept of trade discount?
Yes, sir.
Accounting for trade discount is clear. Trade discount is not recorded in the books of accounts separately. That is what I mentioned here. Trade discount is not recorded anywhere in the books of accounts because the purchase and the sale value always are recorded at the net of trade discount. Means what? From the gross price I minus the trade discount, only at the net price I will record the purchase and the sale. Any difficulty? So the discount allowed, the discount received, what you used to study in your 11th standard, trial balance, final accounts, that was never trade discount. That was something else. That was nothing but either cash discount or rebate. So let's talk about cash discount. What is cash discount? Cash discount is referred to as the discount that is again offered by the seller to the buyer. For what? For 3 possible reasons. First reason is for immediate payment. Or second reason is for early payment. Or third reason is prompt payment. Now let's take the same example. Who sold goods to whom? Amit sold goods to Vikas. Now concentrate. Very tricky part. Amit sold goods to Vikas on credit. Sold on credit. And the credit period is agreed 2 months. How much period? 2 months. Today when the goods are sold, so 21/4/2025 goods are sold. Credit period is 2 months. So 2 months later means what is the due date when the Vikas has to make the payment? 2 months later, May, June. So 21 June 2025. This is the date agreed. This is the date agreed when? On the date of sales. But Amit is not dealing with Vikas for the very first time. In the past also, Amit was dealing with Vikas. So Amit observed that this donkey fellow does not give the payment on time. So whenever Vikas comes asking for the product, one side I'm happy because he buys in bulk. Second side I'm unhappy because the amount of effort that I put to collect money from them is very much. It's very draining process. So now this time when Vikas came, 1 lakh worth of goods was given at a trade discount of 20,000 and the sale was agreed at 80,000. Credit period also agreed 2 months. But this time Amit was like, now I don't want to run behind Vikas for money. Let him give him one more offer. So I gave him one offer. Because since you're buying in bulk, I already give it 20% trade discount. So your net benefit is what? 80,000. Lucky fellow you are. I'm giving one more counter offer. If you make the payment today itself, though I agreed that I'll collect the money after 2 months, which is 21 June. But if you make the payment today itself, now itself, while taking the goods, while carrying the goods, if you make the payment and go, if you do immediate payment, I'll give you a further discount of 10%. How much discount? 10%. So now, what is the intention behind giving the cash discount? The intention was collection of money. When I gave the trade discount, what was the intention? My intention was to push more sales. Trade discount, the person came for buying one product. I gave him multiple products. Bulk purchase I made him to do. I induced him to buy more product by giving him trade discount. So the objective of giving trade discount was to induce more purchase, more sale. What is the objective of giving cash discount? To induce immediate payment. How much discount I'm giving? 10% discount, which means in future or now, not future, now Vikas has to pay how much money? 80,000 into 10% is how much? 8,000. From 80,000, if 8,000 is gone, 72,000 Vikas has to pay. No, Vikas is calculating. After 2 months, if I have to pay, I have to pay 80,000. Today, if I have to pay 80,000 minus 10% discount, 8,000, only 72,000 I have to pay. He will do his own calculation and he may agree to make this payment now itself. This is called as immediate payment. So cash discount is referred to the discount offered by the seller to the buyer for immediate payment. So are you clear with the meaning of immediate payment? Immediate payment in our example is what? Payment on 21/4/25. Sale is also on 21/4. Receipt of the money also 21/4/25. Do you agree with me? So this is date of sale. This is date of payment. What is the meaning of early payment? Now today Vikas came, he took the goods on credit and he went. 2 days later, I'm having dreams that Vikas will not make the payment on time and I have to run behind him. I'm getting very bad dreams. When after 2 days, after 3 days, after 1 week. So after 1 week, let's suppose, or after let's say 1 month. After 1 month, I got the bad dreams. Now, next day morning, I came after the bad dream. Because I have an offer for you. The offer is that if you make the payment today, which payment? Because Vikas took the goods, he forgot. People are like that only, no? They'll take the goods, they'll forget they have to pay the money. That time we will see. Because like, which payment I'm talking about? Hey, 1 month before you took the goods from me, no. That payment I'm talking about. For that, if you make the payment today, I'll give you 10% discount. This offer is given when? This offer is given 1 month later. That is 21 May 25. 21st May 25. 1 month later of the credit sale, there's an offer given by Amit that if you make the payment today itself, I'll give you discount. This is called as early payment. Immediate payment means what? On 21/4, on the same date of sale, if the money is received, it is called as immediate payment. Early payment means what? The date of sale is agreed. So date of sale is done on 21 May 25. What is the date of maturity? What is the date of maturity? 21/6/25. So if the date of payment is happening, before the date of maturity, which is 21/5/25, this is called as early payment. This is called as early payment. This is called as immediate payment. This is called as immediate payment. Any problem in this? Third is a scenario where, you know, Vikas is a person that he never makes the payment on the due date. Last 10 transactions you see, he never made the payment on due date. After due date, he took 10 days, 20 days, 1 month, 2 months, then only made the payment. Now what happened? Amit sold the goods to Vikas on credit. Now we are on which date? 21/6. So we are telling Vikas now, see, the credit period agreed is 21 June. If you make the payment as agreed, we agreed 2 months, no? After 2 months only last money. But you have the habit of further delaying it. No, don't delay it. If you make the payment as promised by you, I will give you a discount of 10%. So this is called as prompt payment. Prompt means what? The payment if done on the agreed date. It's called as prompt payment. So sometimes some people don't make the payment even on the agreed date. To ensure that they pay the money on the agreed date, we give them a discount called as a cash discount. So we induce this cash discount so that we can get the money at least on the agreed date. That is called as prompt payment. So if the payment comes to you on 21 June 25, on the date of maturity, if the money comes to you, this is called as prompt payment. So this is immediate payment, this is early payment, this is prompt payment. In this, do you have any doubts? Easy.
No, sir.
Now, cash discount is always recorded and captured in your books of accounts. You might tell that, sir, when the person is making the immediate payment, that day I know that the money that I'm going to receive is how much? Only 72. Then why should I record the sale at the 80,000 value? Please understand, cash discount is a discount that you do not give to every person. Every person is not like Vikas who will delay the payment. But trade discount is not like that. If any other person other than Vikas is also coming and buying for 1 lakh rupees, still you'll give them 20% discount. So trade discount is a discount that is offered to every type of person for the amount of bulk purchase that is doing. So it is common for everybody. But cash discount is not so common. First point. Second point, trade discount when you give to everybody, you give out of happiness because he's doing bulk purchase. So I don't need to show that bad emotion in the trading, in the books of accounts. Whereas cash discount, you don't give it out of happiness. You give out of a bad, painful past experience. You know that Vikas is not going to make the payment on time, so there is no other choice because I have to make the relation also with this person. Just because he's not making the payment on time, it doesn't mean that I'll say get lost, I'll not do business with you. Because in business, every type of customer is important. And customer is God. So you cannot fight with the God. So now this discount what you offer to Vikas, are you offering this discount to everybody? No. Only people who does not make the payment on time or have the payment related issues, only to those people you give cash discount. So trade discount is commonly given to everybody. Cash discount is not commonly given to everybody. It is given only to selected people. Cash discount, this 8,000 is a pain. And that pain and emotion should be reflected in your books of accounts. The users of financial statement should know that this money, 72,000 you collected only after giving the discount. You should give this information to users. To those 7 people, you should tell, I did not get this 72,000 easily. I had suffered 80,000 loss. Sorry, I have suffered 8,000 rupees loss. I want to show that loss to the users of financial statement. Hence, cash discount is always captured in your books of accounts. Always cash discount is captured in your books of accounts. Any problem? Online people, any problem?
No, sir.
No.
Can we do one question based on cash discount? Okay. Param sell goods for 1 lakh, allowing 10% trade discount and 2% cash discount. For convenience sake, I'm doing this question in 2 ways. One, the cash discount is given immediately. Immediately means what? The date of sale is happening on 21/4. Cash discount also 21/4 or 15th of May. On 2 different dates, I'll record entries. Okay. So case one, both the sales and the cash discount is happening on the same day. In another example, sale is happening on 21/4. Discount is given on 5th of May. So in that case, how the entries will be recorded? Can we see? Okay. Param sell the goods to one person. So we are recording the books of whom? Seller. We are recording books of Param. So please tell me. Okay, let's say this goods is sold to Ajay. Param sold goods to Ajay. Param sold goods to Ajay for rupees 1 lakh, allowing 10% trade discount and 2% cash discount. Now tell me, what is the journal entry? How many accounts affected? Sir, sales account have to impact because I have to give income. I have to report income to the department. So sales have to record. Then I should record cash discount because immediately on 21/4 I'm receiving the money. Then cash account because receipt of money. Cash account because receipt of money. So how many accounts affected? 3 accounts affected. So what is my first entry going to be? Sir, first I'll record the sales. Sales for how much value? Sales for how much value? We have sold the goods for 1 lakh rupees. How do you calculate? So first let's do the calculation part. This 1 lakh is called as what, people? This 1 lakh is called as what? Gross selling price, also called as list price, also called as catalog price, also called as mark price. How much? 1 lakh. From that, always minus trade discount at the rate of 10%, which is how much? 10,000. What is the balance? 90,000. This is called as net selling price or net selling value. This is the value at which you'll record your sales. This is the value at which you'll record your sales. Any problem? Now, from this, I'll give a further cash discount at the rate of 2%. Please tell me, what is 2% on 90,000? 1,800. What is the balance money received in cash? 88,200. Any problem? Now, how do you record the entry? Sir, my income is how much here? In this entire transaction, how much is income? Is 1 lakh your income? No, because at the time of sales itself, you know that this much money you will not receive. And this is the discount that you give to every person, not to selected people. So in your business, it is very normal that the sales is recorded at this value. Whether Ajay is buying, Vijay is buying, anybody is buying, whoever is doing bulk purchase, you have the habit of giving at this rate only, no boss. So you know that in your business, most of the time the goods are sold at the net value. So that is what is the information you have to show to the users of the financial statement. So sales should be recorded always at the net value. Sale is what? Revenue. To increase revenue as per modern rule, credit. So sales account, credit how much? 90,000. In that, how much money did you receive? 88,200. 200 because this is immediate receipt of money, immediate payment. So cash account debit, because the moment I receive the money, my cash balance will increase. To increase the cash balance, debit. So cash account debit. How much? 88,200. Out of 90,000 rupees, 88,200 you have received. Balance what happened? 1,800. Sir, I have not received. Oh my God. You were having an expectation of earning an income of 90,000. Your expectation was how much? Income 90,000. But how much you got? Only 88,200. Balance 1,200 you never got and you will never get it. It's your permanent loss. Debit all expense and losses. So cash discount allowed account debit 1,800. So this type of journal entry is called as what journal entry? Compound journal entry. Compound journal entry. So where we have 2 account in debit and 1 account in credit. Any problem? This is the journal entry for immediate payment. Means what? Trade discount, cash discount happening on both on same day. So you will tell that, sir, on the date of sale, I know that this money I'm not going to receive. No. So why can't I record the sale at 88,200? I cannot record the sale at 88,200 because normally if any other person would have come and purchased the goods from me, my income in the business normally would have been what? 90,000. So 90,000 is the genuine price. This was that donkey fellow who does not give the payment on time. I had no other option to get the payment now to not suffer later. I voluntarily give extra discount out of my pain in heart. Out of my pain and heart. So my pain and heart I should show to people. So actually my income is how much? 90,000. This is the normal value which you sell to every other person. So this is my regular income. This is my regular income. Out of that, unluckily, I'm going to receive in this transaction only 88,200. Balance 1,800 I'll not receive. So I have to show that this product I sold at a loss. I never sell at loss like this to every other customer. To every other customer, how much I sell for? 90 only. So what is my genuine income? Always 90. But this is an exceptional scenario where I had to suffer extra loss to get the money on time. So cash discount is a loss. Always should be sold separately in the books of accounts. Am I loud and clear? Online people, am I loud and clear?
Yes, sir.
Same thing, the opposite person will record in form of purchase. So for me it is purchase. For Ajay it is purchase. What is entry? Purchase account debit 90,000. Sale opposite is purchase. Purchase is what? Expense. For Ajay, purchase. Purchase account debit 90,000. If the seller is recording the sales at the net value, even the buyer will record the purchase at the net value. Net of trade discount only. Not net of cash discount. Net of trade discount only. 2. Out of this 90,000, how much did you pay the money? 2 cash, 88,200. How much money you're not going to pay? 1,800. Please understand. When Ajay went to buy the product, initially this was only agreed. And the bill was prepared based on this. When Ajay was about to leave, suddenly this fellow thought, oh shit, this person does not make the payment, then what will I do? So after the bill was done, then we said that, okay, we'll give you an offer of 1,800. So the person who was buying the goods, in his mind, what is the actual purchase value which he is supposed to pay? His expectation to pay was how much? When he was purchasing the goods, according to him, he purchased the goods worth 90 only. He agreed for 90. Lucky fellow, yes, that he got an additional discount of 2%. So now, if this person, Ajay, is going and buying the goods from any other person, he will still buy at 90 only. Is it necessary that that other person should give him a cash discount? For example, in this question, Ajay got the goods from Param at a cash discount. So Param gave a cash discount to Ajay. Ajay is lucky here. If Ajay is not going to Param, if Ajay is going to any other customer, if he's coming to any other customer, will that customer give 2% cash discount? No. So Ajay's expectation is what? In my business, if I'm buying and selling the laptop, the purchase price of the laptop is how much? 90,000. In this case, you're lucky that you got a discount. You are lucky that you gained a discount. Everywhere you don't get a discount. So I have to show this gain separately to my customer. Look, I purchased from this customer. Since I made the early payment, prompt payment or immediate payment, I got a additional discount. So I want to show that happy emotion to whom? My user of financial statement. Users of Ajay. Hence, I have to show the cash discount separately. So my expectation was to pay 90. But when I was actually making the payment, that person said, may pay only 88,200, remaining 1,800, never ever pay. So that money which I'm not paying is my gain. Credit all, income and gain. So this is 2 discount received. Cash discount received 1,800. Any problem? Any problem? Loudly. No, sir. Online people, any problem?
No, sir.
Can I go forward?
No, sir.
Okay. Always cash discount is recorded separately in the books of both the parties. The person who's allowing the discount, discount allowed. The person who is receiving the discount, discount received. Compulsory you have to show. Because this is an emotion. Discount received is a happy emotion. I got a discount. Hey, like that you have to show. Discount allowed, sad emotion. Like this you have to show. No, not sad emotion didn't come properly. Next time I'll practice more and come. Now, can you talk about rebate? What is rebate? So rebate is also discount allowed. Rebate is also discount allowed. But the reason for giving the discount is the reason other than trade discount and cash discount. Trade discount, what is your reason? Bulk purchase. Cash discount, what is the reason? Immediate payment, early payment, prompt payment. Rebate here means for any other reason other than discount. Oh shit, I forgot one more thing before this. Sorry. I told we'll do this entry in two parts now. One is sale and payment happening both on same day. Sorry. I said one more scenario. Sale on 21 April, payment on 21 May. 15. Okay, sorry. What date is given here? 15th of May. So we'll do that now. 15th of May. This is date of sale. Now please tell me in the books of Param. In the books of Param on 21 April. Payment is not coming, means this is a credit sale. Do you agree with me? What is the journal entry? So first of all, let me record sale. How much sale? 90,000 is sale. On 21 April, did you offer the cash discount? No. At that time, what was the expectation to receive from Ajay? 90,000 only. So Ajay account debit 90,000. Any problem? Ajay account debit 90,000 to sale 90,000. Because when you were actually making the sale for 2 months credit period, you were expecting how much money you receive from Ajay? 90,000. Anything that I receive in future is asset. To create asset, debit. That's why I debited Ajay with 90,000. This was my expectation. This was my expectation. Any problem? Next. Sale is my revenue. Create all income and gain. Now what happened? 15th of May, I got a bad dream that this person will not make the payment on time. To induce the on-time payment or early payment, I decided to offer him a cash discount of 2%. To which Ajay agreed. Now that person came and made the payment. So when he's coming and making the payment, guys, do I need to remember Ajay in my books of accounts? Ajay, when I should remember in my books of accounts? Until I receive the money. But the day I receive the money from that fellow, I should not have Ajay in my book. I should remove him from my book. To bring in my book, I put Ajay in debit. To remove what I should do? Give a credit. Ajay is debtor. Debtor is what balance? Debit balance. To increase asset, debit. To decrease asset, credit. Here I increase the value of the asset. To increase the value of the asset, I gave a debit. To decrease, credit. So to Ajay, I'm closing his accounts to the extent of 90,000 rupees. Why am I closing his account? So we're receiving money. Against that, we're receiving money. How much money are you receiving? 88,200. So cash account debit or bank account debit 88,200. What happened to balance 1,800? See, we're never ever going to receive. We will never ever receive this. This is permanent loss. So cash discount allowed account debit. Any problem? Cash account debit by understood. Discount allowed debit by understood. To Ajay by understood. Ajay's account ledger balance is still there or closed? Closed, because Ajay in debit here means plus. Ajay in credit here means minus. So plus 90,000 minus 90,000. The balance in Ajay's ledger is 0. So what is debit and credit? Nothing but plus and minus, plus and minus, plus and minus. Any difficulty? Comfortable? Okay. Now same thing in the books of Ajay. So on 21/4 when he was actually purchasing, so what was his purchase expense? 90,000. So purchase account debit how much? 90,000. And how much money he was mentally prepared to pay to Param? 90,000. So Param for him is a liability. Liability is what balance? Credit balance. To increase liability, credit. So to Param, 90,000 credit. Any problem? So Param received an offer for early payment on when? 15th of March. To which Param also agreed to make the payment. Sorry, reverse lo peta na. 15th of May. Param credit means what? Param credit means this is the person to whom I have to make the payment in future. So I have to remember his name and amount. Now that I have made the payment to him, should I remember his name? No. To create param, you gave a credit. To close param, I have to give a debit. Close means not that movie close. Movie close, you understand? Close, not that close. This is different close. This is accounting close. Param, in credit to be closed, we have to give a debit. So param account debit how much? 90,000. Why did you close param's account? Because I made the payment. How much payment you made? 2 cash credit, what goes out? 88,200. What happened to balance 1,800? I'm never going to pay this money. So it's a permanent gain for me. Create all income and gain. So 2 cash discount received account. Any problem? Easy? Okay. Online people, comfortable so far?
Yes, sir.
Okay. Now, rebate, I told you, rebate is a discount again given by the seller to the buyer only, but for a reason other than trade discount and cash discount. So what is the other reason? So reason is either the person who sold the goods, the seller, has given the poor quality of the goods. I wanted a proper quality of the goods, but he sent poor quality goods. Will you accept it? No. Or the goods are not as per the specification. Goods are not as per the specification. Example, I'm into business of buying and selling laptop. I ordered 100 laptop of rupees 30,000 each. Of which brand? HP brand, I asked. But this donkey fellow, he gave me what brand, you know? He gave me Dell brand. He gave me Dell brand. Will I accept it? I was wanting which brand? HP. But he gave me Dell brand. Will I accept it? No, but everything is same. Color is same, specification same, performance same, everything is same. Only logo is different. Everything is same, ditto same. Now, the moment I saw there is a difference in brand value, I said, donkey fellow, I'm not going to take this, return it back. I'm going to give it back. Imagine the seller is sitting in Delhi. Seller is sitting in Delhi. We are sitting where? In Coimbatore. Buyer is in Coimbatore, Tamil Nadu. Seller has already taken the effort of selling the goods or sending the goods to Coimbatore, that is Tamil Nadu, by incurring heavy transportation charges. Let's say he's incurred almost 50,000 rupees towards the transportation charges. Now, this is 100% mistake of seller because the buyer asked for HP laptop. In the purchase order, HP laptop only is mentioned. It is the mistake of the seller to sell the Dell laptop. So now, when the buyer is returning the goods back, again transportation 50,000. Who has to bear? Seller only has to bear because it is his fault. No? And again to sell or send HP laptop, again 50,000 transportation charges. So how much gone? 1.5 lakh rupees gone. Plus packing charges, this, that, all put together, 1.5 to 1.6 lakh is coming. Now, seller is thinking that if I incur so much of expenditure, whatever profit margin I get, that also I'll lose it. Instead, somehow I'll convince this person to keep that product because ultimately he's a laptop seller. He can sell any laptop. So we gave him 2 offers. We told him, look, boss, I know it's our mistake. We agree. But the laptop brand, what you asked and what we sent, both are having same specification, quality. I mean, in terms of quality, specification, everything is same. Brand alone is changed. But rest, everything is same. Look-wise, everything is same. You keep it. Don't make me the payment now. Give the payment after 6 months. 6 months. And while making the payment, don't make me 30,000 per laptop. Give me only 25,000 per laptop. Or give me 29,000 per laptop or 28,000 per laptop. I'm just taking a rough value. That person will calculate everything and he'll give you one value. I'm taking a rough value here. So don't compare. Sir, what's a 2,000 discount? 2,000 into 100 means how much? 2 lakh discount. Instead of giving 2 lakh discount, 150 ka return is better. No, sir. So don't go into that calculation. I'm just giving approximate value calculation. So obviously, this person will give me that offer, which will work out for him in both the scenarios. Okay, so he's giving some discount. So for me, I'm thinking, 30,000 worth of laptop. Now he's giving at 28,000. Rest everything is same. Now when customer comes and asks for HP laptop, I'll Monday clarify and give Dell laptop. Everything is same. No, boss. Color is same, size is same, specs, everything is same. I'll convince the person willing that take Dell laptop. And moreover, if you buy HP laptop, I'm selling at let's say 50,000 rupees. I'll tell him if you want to buy, you can buy Dell laptop. I'll give it for 49,500. I'll give at 49,500. So 500 rupees less discount where? In the Dell laptop. So like that, something I can tell and sell the 30 laptops or 100 laptops. Nobody can stop. If a seller wants to sell anything, he can sell anything. So now I have accepted this offer. I said that okay, no problem. 28,000 per piece, deal okay. I'll give the Dell laptop. Because for me, it's an advantage. Now, 2,000 rupees, there's a discount here. Do you agree with me? What is the original price agreed? 30,000. What is the final price agreed after this incident? 28,000. What is the difference value? 2,000. This 2,000 is again discount or not? Okay. Now, can I call this discount as trade discount? This discount was created or given because of the bulk purchase? No. Was it given because of the cash discount? No. Or for early payment or prompt payment? No. So reason is other than trade discount and cash discount. So what kind of discount this is? Rebate. So the person who is giving the discount, the Delhi seller, for him is rebate allowed. For us, it is rebate received. Any problem? Entry wise, both are same. That is, what entry you pass for cash discount? Same entry for rebate. Instead of cash discount received allowed, it is rebate received, rebate allowed. Rest all same. Any problem? Online people, any problem?
No, sir.
Everybody.
No, sir.
No, sir.
Can we start doing questions based on this?
Yes, sir.
Yes, sir.
Please take question number 5. Please take question number 5, which is on page number 2.25. 2.25. Journalize the following transactions. Also state the nature of each account involved in the journal entry. Journalize the following transaction. Also state the nature of each account involved in the journal entry. To state the nature of account. So nature of account as per golden rule or modern rule? Nothing mentioned. So what will you do? Golden rule they have taken. But in exam, they'll specify which rule you have to follow. If nothing given, you can give your own assumption. As per golden rule, this is the thing. As per modern rule, that is the thing. Okay, now let's do it. Journalize the following transaction. Also state the nature of accounts involved in the following journal entry. Following figures are given in hundreds. Okay. December 1, 2022. December 1, 22, Ajit started business with capital 4 lakh rupees. So this is business of whom? Ajit. So in the books of Ajit, we are recording. So please tell me, first of all, is this a business financial transaction or event? So transaction it is. Event is what? Result of the transaction. Event is result of the transaction. This is the first time transaction is taking place. So this cannot be event. And here the transaction happening between business and opposite parties, Ajit. Okay. How many accounts are involved in this? Ajit's capital account and since money is Ajit's capital account and bank account. Okay. Now, please add the heading in the books of Ajit. Very important. In books of Ajit. Journal entries. In the books of Ajit, journal entries. Write the heading, serial number. If you want, you can write it, or you can leave it also. But main important is date, particulars, nature of accounts, LF, debit, and credit. LF very small, narrow line, narrow column. Fast. Nature of account, make it a little bit broader because we're going to give nature accounts as per golden also, as per modern also. So nature of account, have within that 2 column, one for golden, one for modern. First transaction, what date, people? December 1, 22. Now what you can do is get the common heading to save time. December 2022. Common, you write it below that one, because all these transactions taking place in the month of December. Every single time, if you write 1 December 22, you'll be wasting time. So write the month commonly at the top. December 22. Write in common. Below that 1. Now please tell me, people, accounts involved is bank and Ajit. So as per modern rule, bank is asset. Here, bank balance is increasing or decreasing? Bank balance is increasing. To increase bank balance, what am I supposed to do? Debit. Ajit is what balance? Credit balance, capital, credit balance. Here, Ajit's balance is again increasing or decreasing? Increasing. Because if Ajit gives more and more capital, his balance will increase only in the business. So both are increasing. So bank account debit to Ajit's capital account. Classification as per golden rule. Bank is artificial personal account. As per modern rule, bank is asset. As per golden rule, Ajit is natural personal account. And as per modern classification, it is capital. In debit column, how much? Amount is 4 lakhs. 4 lakhs. Below narration, what is narration? Being capital introduced. Being capital introduced. Next transaction taking place on December 3. It says that December 3, he withdrew cash for business from bank 2000. Withdraw cash from bank. How many accounts affected? Cash and bank. Because withdraw in form of cash means my cash balance is going to go up and bank balance is going to go down. So cash and bank both are asset. Cash and bank both are asset. So your cash balance is increasing or decreasing? Cash balance is going to increase because the moment I withdraw the money from the bank, the cash in hand is going to go up. To increase the cash, what am I supposed to do? Debit. And to decrease bank, credit. If I withdraw money from bank, my bank balance will decrease. To decrease the bank balance, I have to give a credit. So cash account debit to bank account. Cash is as per golden rule, real account, and it is asset. Bank artificial personal account, and it is asset. And one balance is increasing, another balance is decreasing. Also, if you can put increase decrease column, it will be better. Or you can do besides it. Here asset is increasing, liability also increasing. How much is the amount? 2000 and 2000. What is the narration? Being cash withdrawn from the bank. Being cash withdrawn from the bank. Any difficulty so far? Open your mouth and respond. Any difficulty so far? Okay. Next transaction is taking place on December 5. He purchased goods by making payment through bank. He purchased goods by making payment through bank. He purchased the goods by making payment through bank. How many accounts are affected? 2 accounts. Purchase account and bank account. Purchase account is what? Expenses. To increase expense, debit. And bank, when I make the payment, bank balance reduces. Asset balance reduces. To increase asset, debit. To decrease asset, credit. So what is entry? Purchase to bank. The date is 5th. Purchase account debit because it is expenses. Debit all expense and losses, or to increase expense, debit as per modern rule. To bank. As per golden rule, purchase what classification? Nominal account. And as per golden rule, expense account. And the balance is increasing or decreasing? Expenses increasing. Bank, artificial personal account. As per modern rule, asset. And the balance is decreasing. How much is the amount? 15,000. Narration, please. Being goods purchased and the payment done through bank. Narration, you can do anything as long as it is making sense. Don't write nonsense in now. December 8. He sold goods for 16,000 and received payment through bank. How many accounts affected? 2 accounts. One is sale account, record my income. And second, money is going out of bank. So that amount I have to minus from bank. What is the entry? Bank to sale. So bank account, DR stands for what? Debtor, no? It stands for debit to sale. Bank as per golden rule. Artificial personal account. As per modern rule, asset. So here bank balance is increasing or decreasing? Increasing. To increase asset, debit. That's what we did. And sale is nominal account. And as per your modern rule, it is revenue. Here it is increasing or decreasing? Here sale balance is increasing. More sale, more revenue, more income. To increase income, credit. To increase income, credit. That's what we did here. How much it is? 16,000, 16,000. Being goods sold for cash or bank, 16,000. Being goods sold and payment received through bank, 16,000, 16,000. December 10, he purchased furniture and paid by check 2,500. Purchase account or furniture account? Furniture account.
Furniture.
So when does purchase account come for furniture? If I'm a dealer of furniture, if I'm buying the furniture with the intention to sell it, then the furniture is not my asset. It becomes my product. And all the product and goods will be routed through purchase account. But here I'm not a dealer of furniture. Anywhere in the question have they mentioned Ajit is a dealer of the furniture? No. Nothing mentioned means furniture is used for usage purpose. It is asset. Is it asset? So now furniture account, and since payment is done through check, bank account will come into picture. Entry please. Furniture to bank. Furniture account debit to bank. As per golden rule, furniture is what classification? Real account. All assets are real except bank, debtor, bills receivable, prepaid expenses, accrued income. Except these five, everything is your real account. And as per modern rule, furniture is asset. Furniture is increasing or decreasing? Increasing. Sir, more and more furniture if I buy, the value will increase. No, sir. It is increasing. So to increase asset, debit. Bank balance. Artificial personal account. Asset. Balance increasing or decreasing? Sir, if I make the payment through bank, the bank balance will decrease. No, sir. So to decrease asset, you have to give a credit. Increase asset, debit. Decrease asset, credit. How much is the amount, please? That's all. Similar amount. 2,500. Okay. December 12, he sold goods to Arvind for 2,400. He sold goods to Arvind 2,400. Sale account, sir. Confirm. Cash account? Cash account will come?
No,
sir, nowhere it is mentioned that the goods sold to Arvind for that money is received. If you see the December 8 transaction, they told that he sold goods for 16,000, received payment through bank. So money received. So this is what transaction? It is cash transaction. Here, nowhere they have uttered a word that the money is received. So this is what transaction? This is credit transaction. The goods is sold on credit. Means I have not received money now. When will I receive the money? In future. Anything that I receive in future is asset. From whom will I receive? Arvind. So Arvind is my asset. Arvind is my asset. To increase asset, debit Arvind. So Arvind account, debit. On what date? 12th. ARVIND. Arvind account debit to sales. Arvind, what classification as per the golden rule? Natural personal account. Guys, when I'm asking question, please open your mouth and respond. Why? Because if a human being is constantly staying quiet for more than 5 to 10 minutes, automatically his brain will go to sleep mode. I don't want that to happen. That's why I'm telling you to keep on participating, answer, so that you'll be having that vibration in the entire face and brain, and that vibration will not allow you to go to sleep mode. So please ensure all of you respond. Arvind, as per golden rule, you said national personal account. As per modern rule, asset. And the balance is increasing. The money that I have to receive from the person is increasing. So the more sales I do to Arvind, more money I have to receive. So if I keep on doing credit sale to Arvind, the money that I have to receive from him will keep on increasing. So Arvind is increasing balance. That's why I've debited. Sales is as per golden rule. Nominal account. As per modern rule, revenue. Revenue is increasing or decreasing? Increasing. Revenue is credit balance. To increase revenue, credit. How much? 2,400. 2,400. You want a break of 5 minutes from here? Or can I continue? This is not going to finish like this. Because in that, I have to explain 2 more concepts. So this will at least go for 1 hour. So if your energy is intact, I'll continue. I have no problem. Otherwise, we'll have to take a break. So it is 12:30 now. Class is still 2 o'clock. So we can take a quick break of 10 minutes you want? 10 minutes. Chalo, 10 minutes. 12:40 sharp your meeting. Thank you. Yes, people, welcome back from the break. So let's continue. The next transaction is, people, December 14. He means who? Ajit purchased goods from Amrit for 10,000. Cash transaction or credit transaction? Cash or credit? Cash or credit? Credit, because nowhere it is mentioned that while buying the goods we made the payment. So it is a credit transaction. It is a credit transaction. Okay. How many accounts are affected? 2 accounts affected. 1, purchase because I have to record my expenses. Second, I need to remember to pay money to Amrit in future. So anything that I have to pay in future is liability. And to create liability, we have to give a credit. So what is debit? Purchase. So what is entry? Purchase to Amrit. Which date? 14th December. Purchase account debit to Amrit. As per golden rule, purchase is what classification? Nominal account. And as per modern rule, expense account. Right, man? Purchase. And the expense balance is increasing or decreasing? Increasing. Hence debit. Amrit, as per golden rule, natural personal account. And as per modern rule, it is a liability. And liability balance is? Yeah. You're increasing or decreasing? It is increasing. To increase liability balance, what am I supposed to do? Credit. Amount, please. 10,000, 10,000. Okay. December 15th, he returned the goods to Amrit 500. What is this? Purchase return transaction. Okay. How many accounts are affected? How many accounts are affected? 2 accounts. One is Amrit account, because to the extent of 500 rupees, I did not pay him. So I need to reduce his account balance by 500. See, earlier, I promised to pay Amrit how much? 10,000, because I enjoyed 10,000 worth of goods. But out of that, 500 worth of goods have returned. So you have to minus it. What is the balance money that I have to pay him? 9,500. So 10,000 you recorded. Upon purchase return, reduction in the value of his account I have to record. No? So that is recorded through purchase return entry. So Amrit is what? Liability balance. To increase his liability, credit. Now I have to decrease his liability by 500. So I should give a debit. So Amrit account debit. To what? To purchase return. Now be ready for a question here. Write the entry, then I'll ask you the question. December, how much? 15th, is it? Being goods purchased for credit, the previous transaction. And here it is, being goods return. Amrit account debit to purchase return account. Please tell me, as per golden rule, Amrit is what classification? Natural personal account. Okay. As per modern rule, liability. But here is liability is increasing or decreasing? Sir, by returning the goods, to that extent, I don't have to pay him the money. Earlier, I purchased 10,000 worth of goods. I have to pay him 10,000. Out of that, 500 worth of goods returned. So balance what I have to pay is less, no? So because of this transaction, my liability is reducing by 500. So to decrease liability, what I should do? Debit. Liabilities credit balance. To increase liability, credit. To decrease liability, debit. Purchase return what classification as per golden rule? And as per modern rule, it is expense, but it is reducing of your expense. It is reversal of your expense. Purchase return belongs to which family? Purchase family. So if purchase is expense family, purchase return also expense family. Purchases increases the expense. Purchase return decreases the expense. Understood? My question to all of you, two questions here. You said this is nominal account and you credited this. Debit all expense and losses, credit all income and gain. What income and what gain here? Are you gaining 500 rupees? Tell me. So nominal account can apply here. Modern can apply, yes. Here, because of purchase return, my expense is reducing. Expense is what balance? Expense is what balance? Debit balance. To increase expense, debit. To decrease expense, credit. So earlier, my expense was how much? Earlier, my expense what I recorded was 10,000. Now, in that, 500 rupees purchase reversed, returned. So balance expense is how much? 9,500. So because of this transaction of purchase return, my expenses from 10,000 got reduced to 9,500. So this transaction is helping me to reduce my expenses, to increase expense debit, to decrease expense credit. So this kind of explanation I'm able to give in modern rule, but in golden rule, I don't have any explanation. Hence, we cannot apply golden rule comfortably here. First point over. Second point. When you created Amrit account upon the credit purchase, you created Amrit. And while reversing, you reversed in Amrit account only. Do you agree my point? When you did a credit purchase, you created Amrit by crediting him. And upon returning the goods, you reverse that amount of 500 were in Amrit account only. So if credit, this Amrit is 10,000 credit plus means you gave a debit 500. So plus and minus both is happening in Amrit account. Why it is that in case of purchase, the purchase is happening in one account and the purchase return is happening in some other account? Why? Why did you ask this question in 11th standard? Tell me, Kana, reason. Mugged up the journal entry. No idea. No idea. You are saying no idea? ये पनीदांडा 11th CBC along with matriculation. இல்ல இப்போ சொல்றேன் நான் this explanation you know this reason kind of forgot subsidiary book எங்கமா இதுல வந்துச்சு why subsidiary book we are not doing subsidiary book, this is journal entry. This is not subsidiary. I haven't taught subsidiary book yet. No idea. No idea. No idea. No idea. No. No. Fancy no. 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 No idea. No idea. No idea. He's near, but not to the point. Okay. Okay. Now, sir, I'll explain this point now. When you recorded the purchase, you record the purchase in the purchase account. You recorded the purchase in the purchase account. Sir, upon purchase return, upon the purchase return happening, can I record the purchase return value in the purchase account itself? Can I reduce the purchase account itself? The answer is yes, possible. For example, in this case, if the entry is alternately to be done, the entry is going to be Amrit account debit to purchases also is possible. Now the question is, sir, then when purchase account I should do and when purchase return should be done? If you know the reason, you will know to justify it. So listen to me very carefully. So Amrit to purchase is allowed. Amrit to purchase return, both are allowed. But both entry will have its own consequences. So understand the logic behind it. In which scenario I should be using this, in which scenario I should be using this, you will decide on the spot. Listen to me very carefully. I'm talking from the context of the seller now. Now, this is the context of purchaser, okay? Now, like how purchase and purchase return is there, there's something called a sales and sales return. So using that as an example, I'll give you example. Same is applied for purchase and purchase return. Okay, now I'm just changing the example. Sold goods to Ram for rupees 10,000. In that, return goods by Ram 500. Okay. Two entry possible. First entry is what? For sale, what is entry? Ram account debit to sale. I'm now explaining from the point of view of sales, okay, not purchases. Sale. Two sales. How much? 10,000, 10,000. Who is recording this? Normal seller. Who is normal seller? I'll tell you. And this is Flipkart seller. So everybody got excited. Flipkart order, huh? Okay. Flipkart seller. What entry? Sir, same entry, sir. You will also record same entry. No, he has not learned accounts from some other person. Every person is going to say teach the same entry. So whenever the sale is done, what entry, boss? Ram to sales. How much? 10,000, 10,000. Okay. Who is a normal seller? Sir, generally, if you talk about any normal seller, any shopkeeper, goods once sold are not to be returned. Have you seen? In so many shops, once you go and buy the product, they'll have a board. Kumaran, once goods are sold, they are not to be returned. Have you seen that? Whatever be the reason, you cannot return it. Before you buy, you check 100 times. Once you are satisfied, you make the payment and buy. So once you buy it, we will not accept the return. So normal seller says that goods sold cannot be returned. When return is possible, in case the goods what you gave or sold turns out to be defective later, you saw the product is defective. In that case, the seller cannot deny the return. He has to take. If it is not as per the specification, then he has to accept the return. But any other reason, like as a customer, if I am at default, then because of that, I cannot return the goods. But if there's a product damage, something like that, then definitely the normal seller will accept return. Practically think and tell me, if a normal seller is selling 1,000 transactions in a month, if he's encountering or recording 1,000 sale transaction, out of this, how much do you think would be the sales return transaction? How much do you think will be the sale return transaction? Approximately 5 transactions. If I sell to 1,000 customers, in that 5 customers, they come back to me with defective product, which means 99. That is what is the remaining amount? 995. So remaining 995, that is 99.5 times the product what I sold is pakka quality. 0.5 times here and there the defect comes. Or 5% here and there defect comes. Do you agree with me? So now, as a normal seller, is it a need for me to record the data in the sale account separately, in the sale return account separately? No. I need not record the sales return in the sale return account. I can return the sales in the sale account itself because I need not keep the track of it individually. On the other hand, a person or a business model like Flipkart, you know that multiple times the return of the goods happens because whenever you buy any goods from Flipkart, there is a refund policy or return policy. So what is return policy? If the product what order you placed is not as per the specifications, you can return. If the product color, the dress color what you've ordered, in the photo it is different and in reality it is different, you can return. The size is not matching, you can return. If the fitting is not proper, you can return. So there are multiple parameters on the basis of which they accept the returns. So if you are a person who is listed on the Flipkart platform and if you are selling the goods 1,000 times, nearly about 300 times the goods will come back return. How many of you have done the return in the Flipkart? Raise your hands. You have placed the order and you've returned it. How many times? Only 1, 2. Others, you know what is Flipkart first of all? Everybody knows what is Flipkart? Okay, wonderful. Thank God. I was in state of shock. Okay. You've not placed order through Flipkart. Gautam says, yes, I've done it. Others? Nobody placed an order. Try and see. So fun. Shopping. Shop. Satisfaction comes because I've shopped it. No money to pay. Return it back. So purchase, sale, they'll happen. I mean, purchase and purchase return, sale, return, it continuously take place. So any shopkeeper is listed on the Flipkart platform, you see In a month, if he's selling 1,000 times, no. In that 300 times, it comes as return. So frequency of return is very high in the Flipkart model business. Do you agree with me? Now, I'm an investor. I'm investing in both of these people's business. Now, out of 1,000 transactions, if 5 transactions are returned, I'm not bothered about it. Because 5 is very petty transaction. Hardly nothing in front of me. 5 transactions a month returned, not a big deal. But this particular businessman, 1,000 times if he's selling, 300 times the goods are coming back. Why? I want to know the reason. So, as an investor, I want this person who's on the Flipkart platform, I want him to record the sale in the sale account, this 1,000 sale in the sale account, and this 300 return in the sales return account. So that I will get to know how much sales he has done, and out of that, how much he's got returned. I want to know that. I want to know individually how much is the gross sale and how much is the sales return. I want to know it separately, because 300 out of 1,000 into 100 means what percentage of return it is? 30% of the goods are returned back. So something is wrong in your business. I want to know why it is returning. So sale is recorded in sale account. Sale return is accounted in the sale return account, so that I can keep an eye on both the accounts independently. But here I'm not bothered, because out of 1,000 transactions, only 5 transactions are returned. So 5 upon 1,000 into 100 is how much? 0.5%. Means 0.5% only return is there. So return is not very significant. In the normal sale business, the return is not significant. But in the Flipkart sale model, the return is significant. Now understand what happens. When the sale and the sale return is accounted in both in one account, then what happens? Let's see. This journal entry, what you've recorded is for sales, correct? Please tell me, for sales return, what will be the entry? Same account I'm reversing. Sale is revenue. To increase revenue, credit. To decrease revenue, debit. So my entry is going to be sale account debit 500 to RAM account 500. Do you agree with me? Now, if I open the sale ledger, what is the posting of the first ledger? Though ledger I have not taught you, but I'm believing that since you have completed 11th and 12th, you know how to prepare the ledger. So on that basis, I'm preparing the ledger, but I meant to teach ledger from my side. What will be the posting for the first amount? Buy RAM, 10,000 rupees. Buy RAM, 10,000 rupees. What is the posting of the second entry? 2 RAM, 500 rupees. So this sale is what? Credit all income and gain. So this is income. And this is reversal of expenses. Reversal of my income. This is reversal of my income. So what is my net income? Net sales. 9,500 is my net sales. This where do I transfer to? In my trading account. Finally, the sale is transferred to your trading account. What is the transfer entry? What is the closing entry? Sales account debit to trading account. That entry I meant to teach. Here only I have a concept to explain. For that, I'm just reviewing it. Okay. I'm not teaching you the closing entry yet. So to what? Trading account 9,500. So what is my closing entry? Third entry. Sale account debit. How much? The balance 9,500. So whatever is the balance of the nominal ledger will be transferred to your trading or P&L account to trading account, because sales goes to your trading account 9,500, 9,500. Do you agree with me? Now when I open the trading account, what will be the posting? Buy sales, how much it is reflecting at? 9,500. So is it reflecting at the gross price or the net price? Net price. Actual turnover is how much? 10,000. In the return is how much? 500. Am I able to get that analysis here? No. So if the sale return is routed through sale account, if the sale return is routed through sale account, then the sale account gets suppressed. From 10,000 it became 9,500. The sale account got suppressed. I'm okay if the sale return account is getting suppressed, if the sale return is very insignificant, small in quantity. So here, what is my sale return value? Only 500. Chiller fellow. Nothing this is. Insignificant it is. It does not influence my decision-making capacity. So if any transaction is insignificant to my decision-making, I will not consider that transaction to be recorded in my books of accounts. But in a business like Flipkart model, where 300 goods are returned out of 1,000, means 30% of the goods are returned, I want to know why it happened. So for that, you have to reflect the sale and sale return separately on the trading and P&L account. Are you able to follow? So in the case of Flipkart seller business model, Sale is recorded in the sale account. Now, but the return will be recorded in the return account separately. So that when it comes in trading account, I'll have sale account 10,000 and sale return 500 separately will be visible to me. Hence, for that reason, I open the sale return account. So who should open the sale return account? If any person in his business, the frequency of the return is very, very high, and your investor or the user of financial statement is expecting you to show that separately, then that return of purchase or sale should be routed through purchase return or sale return account. So in this example, what is my return entry? In this example, what is my return entry? Sales return account debit. See, to create sales, you give a credit. To reverse sales, you have to give a debit. But in which account? Sale return account. So sale return account debit how much? 500. To RAM account 500. So here two accounts are open. One is sale account, another is sale return account. One is sale account, second is sale return account. What is the posting for sale account? Buy RAM 10,000. Buy RAM 10,000. What is the posting for sale return account? 2 RAM 500. Both are nominal account. And the nominal ledger should not have any balance. I'll be discussing in the upcoming classes. All the nominal ledgers should not have the balance at the end of the year. It has to be closed by passing a closing entry and transfer where? To trading or P&L account. So this I'll be transferring to trading account. To trading account how much? 10,000. So what is the entry here for transferring sale? Sale account debit to trading account. To trading account. And this 500 also sale return I have to transfer to trading account. Sanjay, what is the entry for transferring the sale return to trading account? Trading account debit to sales return. So buy trading account. Buy trading account. How much? 500. So what is the entry for this? Trading account debit to sales return account. How much? 500. 500. This will be 10,000. 10,000. Do you agree with me? Now, if I open the trading account, please tell me the posting of the third journal entry. Buy sale 10,000. Buy sale 10,000. Do you agree with me? And to sale return 500. To sale return 500. Now I'll teach you in the future also. Now also I'll tell you. In mathematics, you know left hand side, right hand side. So this is your left hand side. Your debit side is your left hand side. And your credit side is your right hand side. And center line is like your equal to. In mathematics, if anything comes from left hand side to right hand side, plus becomes minus. Minus becomes plus. Same way, guys, this sale return on the debit side, does it make any sense? Sale return means what? It is a reversal of income. If I record on the debit side, means expenditure side. Does it make any sense? No. So experts said that, please take this to the other side. So this plus sales return, when it comes to the other side, becomes minus sales return. That is the logic behind minusing sales return from sales. So this, if I take to other side, becomes minus sales return. Minus sale return 500. So what is the net amount? 9,500. Now please tell me, let's suppose all of you are the user of the financial statement. This information is giving you more information, or this presentation is giving more information, or this presentation is giving more information. This is also trading account. This is also trading account. Which information is giving, which presentation is giving you more information? In this, I'm only getting to know only sales. How much sales returns? I'm not getting any visibility. Whereas here, acha, 10,000 ka sale is done. In that, 500 ka sale return is done. So balance is how much? 9,500. Buy sale, 10,000 rupees minus sales return, 6,000 rupees. Balance is how much? 4,000. Now this is giving me information that, donkey fellow, you are initially selling goods for 10,000. In that, 6,000 worth of goods are returned. Why? Why are people returning your product? So like that, I can ask the question when you show this information to me. So if you want your sale return to be reflected separately as an amount or an account, so that you can take some decision making, in that case, the returns will be routed through the purchase return and sale return account separately. But in your business, if the returns are very negligible, if the sale return and the purchase return are very negligible, very small in quantity, you need not show the return separately. You can do the return in the sale and purchase account itself. Now tell me, logic is clear or not? Good information? No energy, but Nobody's appreciating sir for this effort. Loudly clap all of you. Umran is thinking that sir is taking, forcefully the praises. This clap is not forcefully taking the praise. This clap is to make you all awake. When you clap, what happens? There's a vibration in the entire body. You will stay awake. So clap was for that, not for praising me. I know I'm a good teacher. Now, December 16, he received from Arvind. Okay, now we didn't pass entry for that, boss. Okay, before that, this part is clear, no?
Yes, sir.
Why the sale is not routed through why the sale return is not routed through sale account and routed through sale return. The logic is clear. In the business, if the returns are very, very high in number, huge in value, and if you want to trace it separately, then the return will be routed through sale return and purchase return account. In your business, if the returns are not, very significant, hardly it is negligible. It is negligible returns. In that case, and if you don't want to keep a track of it separately, then the return can be done in the sale account and purchase account itself. Logic is clear. Now let's go back to our transaction. Amrit to purchase return. To increase expense, debit. To decrease expense, credit. What is the amount? 500 and 500. Please tell me how much is the money that we owe to Amrit as of now? Are you sure? How? Sir, initially we were owing him 10,000. But in that he returned 500 worth of goods. So how much balance we have to pay him? 9,500 we have to pay him. Will you remember this point? Okay. Now, December 16, he received from Arvind 2,300 in full settlement. We're not talking about Amrit. We're talking about Arvind. Who's Arvind? Who is Arvind? Arvind is a person to whom we have sold the goods on credit. We have sold to him how much? 2,400. How much money are we supposed to receive from him? 2,400 we are supposed to receive. This donkey fellow is giving me how much? 2,300. Sir, balance 100 will give me later, sir. Donkey fellow, they're telling the word full settlement. What is the meaning of full settlement? Full and final settlement. After this, you don't see my face, I will not see your face. Break up. Whatever gift the boyfriend gave, everything returned. Whatever gift girlfriend gave, everything returned. Gift also exchanged. So you all see the movie, no? No? Such movies you have not seen only. You guys are coming from which world, man? Now, received from Arvind 2,300 in full settlement. Which means what? We are also okay. We are also okay to receive this 2,300. Where my expectation was 2,400 to be received, I'm okay with 2,300 being received. What happened to balance 100 for me? So I'm okay with that money not being coming. I'm okay with that loss because that is what discount? Cash discount. Trade discount 100% cannot come in the books. And moreover, trade discount normally happens in the time of purchase and sale. Here, the purchase and sale happened when? 12th of December. 16th of December, what is happening? Settlement is happening. Settlement means what? Payment. At the time of payment, discount given means what? Discount. Cash discount. Now tell me the entry for this. Okay. How many accounts affected? 3 accounts affected. 1. So since money is received, bank account. Second, we have to close Arvind account because we have to forget him from our memory. Break up part, then everything has to be, memory has to be erased. Then discount allowed because loss for us. Entry, please. Very good. 16 December, no? Okay. Sir, Arvind was initially debited. Why? Because I was expecting to receive money from him in future. Arvind for me was asset. Now is no longer asset because he's made the payment. To increase asset, debit. To decrease asset, credit. Now he has made the payment. I'm removing him from the accounts. So I'm decreasing his value in the books. I'm decreasing his amount in the books. To increase asset, debit. To decrease asset, credit. So now, leave 2 lines and write to Arvind. To Arvind in credit. Arvind was what classification earlier? Natural, personal account and asset. Upon sale, Arvind's balance increased. Upon payment, Arvind's balance will now decrease. To increase asset, debit. To decrease asset, credit. So any problem here? We are closing his account to what extent? Full 2,400. We are having this full expectation 2,400. No, full 2,400 should be closed because we are having a full and final settlement. Means after this, we will not have any expectation from this fellow. So if I only close Arvind account to the extent of 2,300, in the ledger, 100 rupees will be left as pending. For example, if I open Arvind's ledger, in Arvind's ledger, 2 sales is how much? 2,300. If I write by bank, sorry, 2,400. If I now write by bank only 2,300, if I close Arvind account by 2,300, 100 rupees will be reflecting as balance carried on in his ledger. As if I have to receive this money from him in future, it will show like that. But am I going to receive this 100 in future from him? No. So you have to close his account. So to close his account, if debit was 2,400, credit also should be 2,400 only. Credit also should be 2,400 only. So you have to close Arvind's account by full 2,400. Any problem here? Why are you closing this 2,500? Sorry, why are you closing this account by 2,400? Because you received money. You received money. How much money you received? 2,300. Bank account debit. Bank account debit. How much? 2,300. And the balance money, 100, what you're not receiving is your loss. Debit all expense and losses. So this is discount allowed. I allow the discount. I allow the discount. So for me, it is a loss. So discount allowed account debit. If I allow the discount means I'm telling that don't pay me that money. So that money which I am not receiving is my loss. Bank is artificial personal account. Artificial personal account. And asset. And here asset balance is increasing. To increase asset balance, debit. And discount allowed. As per golden rule, nominal account. And as per modern rule, it is loss. It is loss. Increase of loss. To increase loss, debit. Loss and expense is what balance? Debit balance. To increase expense, to increase loss, debit. Any problem? Online people, any problem? See, while posting the compound journal entry in the ledger, majority of you will have a problem. But when I do the ledger part, that time I'll tell you how the posting needs to be done. So my focus here is only on the journal part today. If this logic is clear, can I go forward? Online
Yes.
people? Okay.
Yes.
Yes.
Now, point number 10. Okay, then I have to explain one concept here. Or can I do one thing? This transaction. No. 10th, keep it pending. 11th, we can do now. 12th, we'll do. 13th, we'll do. 14th, we'll do. 10th, I will do after I do 11, 12, and 13. 11, 12, 13, 14 transaction. 10th, I'll do at end because I have to explain one concept here. So I'm keeping this point alone pending. So leave one space for one journal entry. So leave some 3-4 lines for this journal entry. Journal entry narration put together. We come and do it at the end. Next. December 20, he withdrew cash from the business for personal use. Personal use. Guys, from the business, you're withdrawing the money for personal purpose. Can I record that as my business expenditure? No. So guys, this 2,000 rupees is the money for owner's personal purpose. Owner did not have the money at that point of time, so I paid from my pocket. I mean, so business. So from the pocket of business, money is gone out. So to bank. What will be debit, people? What will be debit? So debit always should be drawings account. Drawings account. Drawings belongs to which family? Capital family. Like how sales return belong to sale family. Like how purchase return belong to purchase family. Like the drawings belong to capital family. Drawings is done by whom? By the owner himself. So capital belongs to owner means drawing also belongs to owner. So by that virtue, drawings becomes by what classification as per what do you call it? Golden rule. Artificial personal account as per golden rule. Drawings and capital both are done by the owner. Owner is natural personal account. I said artificial, sorry. Natural personal account. It is natural personal account. Any problem? And as per modern rule, drawings belong to which family? Capital family. Capital family. To increase capital, credit. To decrease capital, debit. So this has got the impact of decreasing capital. Why it is decreasing, I'll tell you in some time. To bank. Bank is what? Artificial personal account. And bank is asset. If I make the payment from the bank, my bank balance decreases. And to decrease the asset, I have to give a credit. To decrease the asset, I have to give a credit. Any problem? Ashwin, Barni, Bhuvan, Darshini, Harshita, Hemashri, Laksh.
No, sir.
Nia,
No,
Shah,
sir.
Priyadarshini, Priya, Soumya, Yashaswini.
No, sir.
Please.
No, sir.
How much is the amount? 2,000. 2,000. Being money withdrawn from the business for personal use. Now understand this point. Please understand this point. Let's say this is, owner is Ajit, no? Ajit's capital account. So how much money did Ajit pay in the beginning? Capital. 4 lakh rupees, let's suppose. Okay. So by bank, 4 lakh rupees. Do you agree with me? If I close the ledger, what is the balance carried down? 4 lakh. Balance brought down 4 lakh. Cash bank, anything is fine. I'm just explaining one concept here. So buy bank, buy cash, anything is fine. Now I'm telling you, this person has withdrawn 2,000 rupees from the business. Whose money who withdrew? Business money owner withdrew. Can we do this? Not allowed. But he was in need of help, so we helped him. Correct? Now this person has withdrawn the money, which means I have to get this money back from the owner in future. Unless that person gives me the money, no, I will catch hold of his capital account. I'll catch hold of his capital account. I'll freeze his capital account. So when the person is withdrawing the money, that time the entry is drawings account debit. How much? 2,000 to cash account or bank account. To cash or bank, whatever you see. Later, this drawings account is there, no? This drawings account should be transferred to your capital account. So this entry is called as a transfer entry. So what is the meaning of transfer entry? When I'm transferring an amount from one account to another account, it is called as a transfer entry. So now this drawings, I will transfer to which account? Capital account. So drawings, when you created by giving a debit. To close, I have to give now credit. So 2 drawings. How much? 2,000. Instead of that, what I should debit now? Capital account, I'll debit 2,000. So this entry, if I post in the capital account, what will be the posting? 2 drawings, 2,000 rupees. 2 drawings, 2,000 rupees. Now please tell me, what is the balance carried on? 3,98,000 rupees. So what are we telling to that person? Look, Mr. Ajit, you are the owner of the business. We have that emotion with you, but you are enjoying business money for personal purpose. Not allowed. So this money, what you withdrawn, unless you give it back to me, I will attack your capital account. I'll freeze your capital account. I'll adjust it from your capital account. If the person would not have withdrawn the money from the business, and if the business is closing, I would have given him the entire closing balance to Ajit. Do you agree with me? Imagine at this stage, if the business is closing, how much money we owe to Ajit? 4 lakh. Now imagine if the business is closing here, how much money we'll pay to him? 398. So the 2,000 rupees what he has to give me, I have subtracted from this place. So the 4 lakh what I've given to Ajit, from that I've subtracted 2,000 what he has to give me. So I'll pay him now how much balance? 398. This is the same logic what we applied in the partnership topic. So all of you are doing partnership with me. In that we did the entry, same thing. Partners capital account debit to drawings, same treatment. Any problem here? So drawings has got the impact of reducing your capital. Drawings has got the impact of reducing your capital. Capital is what balance? Credit balance. To increase capital, credit. To decrease capital, debit. So this 2,000 rupees what you have debited in the capital account is decreasing your capital from 4 lakh to 398. So always drawings will have the impact of decreasing your capital. Any problem here? Online people, any problem here?
No, sir.
No, sir.
So here we record only one entry, drawings to bank. So then will you not record the next entry, transfer entry, capital drawing? Will you not record? I will record. When? Not now, at the year end. Why am I recording every transaction to drawing? Because in a month or in a year, I'll do multiple drawings. So in the drawings ledger, as and when I keep on withdrawing the money, I'll keep on recording. To cash, first time 2,000. Next month, again I withdrew money. Drawings to cash, again 4,000. Next month, one more time I withdrew the money. To cash, 5,000. Like that every month I'll withdraw. Finally, what is the total money withdrawn? 5 plus 4 is 9. 9 plus 2 is 11. 11,000 totally withdrawn. Everything is over. Now when I pass a transfer entry, I'll pass a single transfer entry for entire 11,000. Are you able to follow? Every single drawing I will not transfer to capital because it makes my capital very clustered. We have too much of data in the capital account. Unnecessary too much accounts means it will become a headache for me. So to keep it very simple, I want to keep my capital account very simple and plain. So what I do, one single entry I'll transfer to capital account. So by capital how much? 11,000 rupees. So what is entry for this? Capital account debit to drawings account 11,000, 11,000. So drawings to cash you will record as and when the amount is withdrawn. Final entry, transfer entry, one single entry. The total drawing in one shot is transferred from drawing account to capital account. So that entry is called as what entry? Transfer entry. So what is the meaning of transfer entry? Sir, if we are transferring any amount from one account to another account, that process is called as transfer entry. Transfer entry. Any problem in this? Online people, are you clear with this point?
Yes, sir.
Yes, sir.
Okay.
Yes, sir.
11th December entry done or not done? All of it done? Okay. Not 11th it is, sorry. 20 December is it? Okay, 20 December. Next, December 24, paid telephone charges 110. Paid telephone charges 110. What is entry? Telephone charges to bank. Telephone charges to bank. Have they taken cash or bank? Bank only. So wherever the cash is absent, the information about the cash paid is absent, the payment is routed through bank account. Now, sorry? Because we do cash from personal use, no? Oh, sorry. Guys, it is drawings to cash, not bank. It is drawings to cash, not bank. So in that case, it is not artificial personal account, it is real account. Real account. Guys, in the previous entry, withdrew cash from business for personal use means you are withdrawing the cash in hand. So it cannot be drawings to bank, it will be drawings to cash. So if it is cash, then it is real account. Next is December 24. What is entry? Telephone charges to bank. Telephone charges account debit to bank. Telephone charges what classification as per golden rule? Nominal. As per modern rule, expenses. Expenses is increasing or decreasing? Expenses increasing. To increase expense, debit. Bank, artificial personal account. As per modern rule, asset. And when you make the payment through bank, your bank balance will decrease. To decrease asset, credit. How much? 110, 110. Okay. Next. December 26, amount paid to Amrit. Amrit in full settlement 9450. Who is Amrit? Who is Amrit? Sir, Amrit is a person from whom we have purchased the goods on credit. 10,000 worth goods purchased on credit. In that, how much goods returned? 500 worth of goods returned. So how much money do we owe to Amrit? 9,500 we owe to Amrit. Let me erase all this once again. Guys, December 14, we purchased goods from Amrit for 10,000. How much money we owe to him on December 14? On December 14, how much do we owe him? 10,000. December 15, he returned 500 worth of goods. So to the extent of 500 rupees, I have to reduce his balance. So how much is the balance amount that I owe to him? 9,500 is the balance amount that I owe to him. So this is the money that I have to pay to him finally. Now, out of that, how much I'm paying? I'm only paying 9,450. And this is full settlement. Means what? If I'm paying 50 rupees less, I'm also okay. He is also okay. Settlement means what? Both are agreeing for that price. Settlement means what? Both are agreeing for the price. So he's okay with 9,450. Where I was supposed to pay 9,500, now I'm only paying 9,450. What is the difference amount? 50. What does this 50 means? It's a discount allowed by him, received by me. What type of discount is this? Trade, cash, or rebate? So this is a discount at the time of settlement. Means this is cash discount. For us allowed or received? For us received. Okay. What is entry, please? Amrit was creditor. He's sitting in credit. To close, I had to give a debit. Amrit account debit. Amrit is a liability. I am closing his liability. Upon payment, my liability reduces. To decrease liability, debit. How much liability reducing? So full 9,500. Full 9,500. I have to close the entire value of Amrit. Two, how much money are you paying? The closure of the ledger is happening by what? Making the payment. So how much money are you paying? 9450. What is the mode they have not told? So this will be two bank. Two bank how much? 9450. So out of 9,500, if 9450 are paying, what happened to balance 50? So balance 50 you are not paying. You will never pay. It is a gain for you, advantage for you. Credit all income and gain. So two discount received. Two discount received account. Amrit is a natural personal account as per golden rule. Modern rule liability and his balance is reducing by 9,500. Bank is artificial personal account. It is asset. And when I make the payment, my balance is reducing. Asset is debit balance. To increase asset, debit. To decrease asset, credit. Discount received as per golden rule. Nominal account as per modern rule. Gain, revenue. And this is increasing. To increase gain, to increase income, credit. Because income and gain are credit balance item. To increase them, we have to give a credit only. Being amount paid in full settlement. Being amount paid in full settlement. Narration is very, very important. 14th question. December 31, paid for stationery 200, rent 5,000, salary to staff 2,000. From bank. So how many accounts affected? 1, 2, 3, 4. These three are expenses. Debit all expense and losses. And money is going out of the bank. Bank is the payer of the money. Credit the giver. Combined entry will do it. Combined entry will do it. We have to save time. So what is the first amount? First account, stationery. Stationery account debit. Then rent account debit. Rent account debit. Then salary account debit to bank. How much is the amount, please? 200, 5,000 and 2,000. Total amount, please. 7,200. Stationery as per golden rule. Nominal account. Rent as per golden rule. Nominal account. Salary as per golden rule. Nominal account. Debit all expense and losses. And all of these are expense category and the balance is increasing. Bank is artificial personal account and asset and the balance is decreasing. Any problem?
No,
Any
sir.
problem? Now, there's one important concept to be discussed. Once that is done, I'll go to the next point. I mean, that entry will do it and we'll finish it. This is TS level. Guys, all of you have the TSD book with you? If not, please get it. This is the base for the foundation. Without this book, we are not going to survive. Now listen to me very carefully. Business purchased business purchased rupees 5,000 worth of chocolates for what purpose? For selling purpose. So upon purchase, and I paid money through cash. Upon purchase, what entry do you normally pass? Purchase account debit. Debit all expense and losses. 5,000. And since money is paid to cash account, 5,000. Do you agree with me? This 5,000 rupees is my expense. 5,000 is my expense. If this expense is for purchase of the goods, goods means what? Which I buy with the intention to sell. Then that expense cannot be recorded in the normal expense account. It has to be recorded in a special expense account called as purchase account. So purchase account is not like a normal expense account. It is a very special account. It has got its own significance. Now, this 5,000 as an accountant, as a chart accountant, I allowed you to record in the purchase account since you said that I'll be selling this product. Because in trading account, when I record the sale value, let's say this 5,000 worth of chocolates, I sell it for 7,000 rupees. I want to know what is its corresponding purchase value. Purchase how much? 5,000. So as a user of financial statement, I want to know the product what you sold for 7,000 rupees, what is the corresponding purchase? So purchase means what? Any person. What do you infer by the word purchase? Purchase means what? Okay, you would have purchased a chocolate and sold the chocolates. So purchase and sales are related to each other. Do you agree with me? So for me, it is very important to show the expenses as a separate classification which everybody can understand. If I record like this as normal expenses with everything else put together, I will not know what is the actual purchase cost. So as a accountant, I have to give the clear information to the user that this is my purchase expense, these are my other expenses. So purchase has got its own significance for presentation. Now this 5,000 rupees, I allowed you to record in the purchase account because you promised that you will sell the product. You'll sell the chocolates. Now, sometime in the business, it so happens that you have to break the promise. Means what? These chocolates, what you have purchased, instead of selling, you did something else with it. What did you do? First option. These chocolates, you gave it as a charity or you donated. So somebody came in and as a charity, you donated. So my first question to all of you, did you break your promise or not? Did you break your promise or not? You broke the promise. Why? Because I allowed you to record this 5,000. I allowed you to record this 5,000 in the purchase account because you promised to sell the chocolates. Did you sell the chocolates? No. You have given it as a charity. So can I allow this 5,000 to remain in the purchase account? The answer is no, no, no. It cannot remain in the purchase account. So now this 5,000 rupees I have to remove from purchase account. To record in purchase account, you gave a debit. To remove, what I should do? Give a credit. So now the entry is what? To purchase. To purchase 5,000. So my purchase is reduced. This 5,000 expense is no longer purchase expense. But all of at heart, we know that this donation is done. Charity is done for the business purpose only. So this is business expense only. So you record as expense. We are not denying. But you cannot record as purchase expense. Record as a charity expense or donation expense. You have to change the entry from purchase account to charity account. You're transferring the amount from purchase account to charity account. So this entry is called as transfer entry. When you're transferring the amount from one account to another account, it is called as a transfer entry. So earlier this 5,000 was in debit of which account? Purchase account. I'm removing from purchase account and recording in which account? Charity or donation account debit. Any problem here? So I'm transferring the expense from one account to another account. So I'm reducing the expense in the purchase account and I'm increasing the expense in the charity or donation account. Any problem? So this type of entry is called as what entry? Transfer entry. Any problem in this? Any problem in this? Okay. Now, second scenario, these chocolates, instead of selling it, you gave as a sample. You gave a sample. So when do we give a sample? So if I'm, let's say, launching a new chocolate product and I want people to taste it, so I will give it as a sample, no? Because if people like it, people will give me more orders. So this is a kind of promotion that I'm doing for the business. I have launched a new chocolate in the market. Why will anybody come and buy the new chocolate directly? And why will they buy the chocolate, taste the chocolate, then they will do it? No. So generally, all these type of products are there, no? The companies will give it free of cost as sample to people for that tasting purpose. Once people like it, once the taste is developed, then people will come and buy. So until then, I have to give samples, no, for business promotion and marketing. Now, this 5,000 worth of chocolate, what you had purchased, you promised that what will you do? What did you promise me? You promised me to sell. Therefore, I allowed you to record this 5,000 which account? Purchase account. You gave this as a sample. You have a genuine reason, I agree. But did you break the promise or not? You broke the promise. Now, this 5,000, can it stay in the purchase account? No. So now we have to reverse the purchase by giving a credit. But this is expenditure, no. So expenditure needs to be captured in the books, right? So you have to give a debit. In which account? Advertisement account or sales promotion account or sample account debit. So I'm transferring the account from purchase account to other account called a sample expenses account. So business promotion expense account or sample expense account debit 5,000 to purchases 5,000. So I'm reversing the purchase in the purchase account and increasing the purchase or expense in the business promotion account. I'm reducing the expenses in the purchase account and I'm recording the purchase in the sample account. Now my question goes to all of you. To record expense in this, what is golden rule says? Debit all expense and losses. Right? Debited as per golden rule. Okay. To purchase you have credited. Purchase originally you have debited. Do you agree with me? Purchase originally you have debited. In golden rule, why do you debit purchase? Because it purchases nominal account. And nominal rule is what? Debit all expense and losses. Debit all expense and losses. Now same purchase. Can I say same purchase will be same nominal only? Now what is the nominal rule? Debit all expense and losses. Credit all income and gain. What is the income and gain here, my dear? Tell me. What are you gaining? What is your income here? In the previous case, you gave us a charity. That time, what is the entry? Charity or donation account debit to purchase. Again, purchase you credited here. Purchase is as per golden rule is nominal account. Nominal says what? Debit all expense and losses. Credit all. Credit when it is income and gain. What was the income and gain there? When you gave as a charity? Means are you receiving any money from that person? No. So why did you ask this question to your school teacher? Tell. Golden rule is a failure again here. Like that, multiple times I'll prove that golden rule does not fit in all the type of transaction. That is why we are taking help of modern rule. Modern rule, what is the justification? To increase the expense, I gave a debit. To increase expense, debit. Now, it is no longer a purchase expense. I have to reduce the expense. To reduce the expense, credit. To increase expense, debit. To decrease expense, credit. This is modern rule. Increase means what? Add. Decrease means what? Minus. That's all. First example, second example. Understood, not understood? Understood. Third example. Drawings in cash, drawings in goods. Lot of people, I ask a question. Goods withdrawn for personal purpose. Tell me the entry. Sir, cash to bank, sir. Or bank to cash, sir. Sorry. Goods withdrawn goods withdrawn for business, I ask. People give me journal entry for drawings of cash. What entry they say me? Drawings to cash, they say me. Drawings is of two types. Owner can withdraw two things, either cash from the business or goods from the business. If he's withdrawing cash from the business, it is drawings to cash. But he can withdraw goods also, no boss. Same example you take it. I'm a businessman who is selling the chocolates, who's into the business of buying and selling the chocolates. I'm sitting, waiting for customer. Customer did not come. One full day. I was upset. Friend, box, rack, full of Ferrero Rocher chocolates. I saw that. I fell in love with that chocolate. I took that box. I ate the entire box. 8 plus 8, 16 chocolates, one shot over. Am I paying any money for that? No. Means goods withdrawn by me for personal purpose. I ate it for my own purpose. It's for my personal consumption. If I take it home, goods withdrawn from the business for personal purpose. So are you able to differentiate? Here, the money is withdrawn for personal purpose. Here, goods is withdrawn for personal purpose. What are these goods? These were those goods which you purchased in the business with the intention to sell. That goods I ate. Yes or no? Drawings or not? Yes. So if I ate that, who has to pay? I have to pay. Unless until I pay, what will business do? Business will hold my capital account. Business will hold my capital account. So drawings to purchases, and this drawings is finally transferred where? To your capital accounts. What is my transfer entry? Capital account debit to drawings. So whoever is withdrawing the goods, he has to suffer, he has to pay the money. So drawings account debit is justified or not justified? Goods withdrawn for personal purpose. Anything which goes for personal purpose has to be routed through drawings account. And at the end, whatever is the value of the drawings account, everything should be transferred to capital account. If anything is going to capital account means I'm responsible to pay that money. So until I pay that money, they will reduce my capital and keep it. Okay, ba. Now, to credit is what? Purchase. Why? Because this 5,000 worth of goods when you purchase, no. You promise that you will sell. And I allowed you to record this 5,000. Where? In the purchase account. Now, what did you do? You broke the promise. Instead of selling the product to the customer, you ate it. So nice. Now, did you break the promise or not? Yes. If you've broken the promise, Can I allow this 5,000 to remain in purchase account? No. So to reverse purchase, what am I supposed to do? Credit purchase. To purchase 5,000. This is a reversal of expenditure. To increase expense, debit. To reduce expense, credit. To decrease expense, credit. And debit will be what in place of that? Drawings account. So this will not go to trading account. From here, the drawings will go to the partner's capital account. Because this is a transaction done by the owner in the capacity of the owner. So drawings to purchases, any problem. Online people, any problem. Tell me.
No, sir.
No, sir.
Everybody.
No, sir.
Wonderful. Now, can we do that question? December 18,
Yes.
he withdrew goods for personal use. How much worth? 1,000. So this 1,000 worth of goods when you purchased, what is the entry recorded? Purchase account debit to either cash, bank, credit. I don't know. You purchase the goods for credit or cash. I don't know. So credit can be anything. But this 1,000 I recorded in the purchase account, or I allowed you to record in the purchase account. Why? Because I promised, or the business promised, that I'll sell this 1,000 worth of goods. But now what happened? This 1,000 rupees worth of goods was withdrawn by the owner. For what purpose? Personal purpose. So can this 1,000 rupees expenditure be in the purchase account? No. I have to reverse it from purchase account. So to purchase account. How much? 1,000. And this is withdrawn by the owner. So I receive money from owner. Until I receive money from owner, I'll hold off his capital account. So I'll be attacking his capital account. But through which account? Through drawings account. So drawings account, debit to purchase. Later at the end of the year, this drawings ka total will be transferred from the drawings account to the capital account. So drawings account debit to purchase account. Entry matching or not matching? Drawings account debit to purchase account. Personal account. Drawings is personal account and purchase is nominal account. But nominal, tell me the rule, no? Tell me rule. You have credited, credit all income and gain. What is the income here? What is the gain here? Tell me. Any answer? What is the purpose for income and gain here? Nothing here. Gone. But from exam point of view, this is yes. So what is my entry here? We'll have the space here, no? Here it is. On which date it is? 10th, is it? 18th. Okay. So drawings account debit to purchase account. Drawings is belonging to which family? Capital family. So this is natural personal account and it is capital and the balance is decreasing. So debited. Purchase is nominal account, expense account, and this is reducing. To increase expense, debit. To decrease expense, credit 1,000. So drawings to purchase 1,000, 1,000. I meant to do one more concept with you. Loss of goods by theft of fire or goods destroyed by fire. This is also a concept related to purchase only, but this requires fresh mindset. So freshly when we meet next class, which is on Wednesday, that time I'll be discussing this concept. Am I loud and clear? So once this is done, the very same day, we have few more questions to do in the accounting process. So next 6th is done, no? 6th we already completed last class. 7th we'll do it. After that, we have 2 questions in the book back practical questions. So probably I'll spend next 1 hour and I'll finish off journal in that class. And the very next class, that is the same class, I'll teach you the ledger also. We'll finish ledger also. So once we finish ledger in the next class, then the following class, which will be on Friday, we'll target to complete trial balance. Once trial balance is completed in that session, the very next session, whatever is the date, we'll start with GST. So GST is very new for all of you. Though CBC people have studied in 11th standard, but that is 2 years ago. So I'm sure you would have forgotten it. So we'll be doing GST afresh. This is the roadmap.
Sir, what about the 4 concepts?
Sorry?
What about the 4 concepts?
Which 4 concepts?
Accrued income.
That is there. That will come followed by that.
Okay, sir.
If possible, we'll try to incorporate that in tomorrow's, there is next session itself. So we'll do one thing. We'll not start ledger in the next class. We will do outstanding expenses cut detailed. No, that recording is okay, but I have to discuss afresh. So we'll, if possible, we'll do it in next class. If time permits, we'll start ledger. If not, ledger we'll do Friday. So 1 class will be delayed. No problem.
Yes, sir.
Anything else? Now I want all of you to stay back. I'm closing the video officially, but I want to stay back to discuss something important. So please stay back. All people don't go anywhere. Otherwise, conceptually, whatever we discussed, are you all comfortable today? Okay. So guys, on that positive note, let's sum up today's session, people. That's all from my side for today's session. Today is what, Monday. I'll see you all on Wednesday, 11 a.m. sharp. Until then, bye-bye. See you. Take care.